that Elon Musk is telling Donald Trump what to do, Elon is probably going to have to pack up and go back to Austin.
Is President-elect Trump, is he a lame duck president today? Like,
Why do you ask that? That's an interesting question. Like, what suggests that to you?
I mean, you know,
I would say no, but I don't know.
Well, I kind of feel like he can't run for another term. So I kind of feel like, unless he repeals the 22nd Amendment.
Well.
Okay, and maybe you can factor that in.
Yeah.
But if I'm a senator, I'm like, do I have to really worry about this guy? I know it's 4 years, but it's just 4 years.
Yeah, I mean, I do think there's a strong faction in the Senate they are traditional conservative Republicans. They are not MAGA, and they're worried about the own future of the party, its character, what it stands for, what kind of a force it is in U.S. politics. And I think they see Trump as a useful blunt force to win an election, to dismantle parts of the administrative state, bring taxes down, revisit some other Republican policies that are familiar from over the years. And while also dispensing with all of the cartoonish, buffoonish, and dangerous things Trump also likes to stick his feet in more often than not.
In the election, sort of the postmortem, one aspect I was thinking, did people go into the polls and say, I can vote, number one, on the economy, and number two, there's a state ballot initiative on reproductive rights, and I can vote on that separate, keep those two things separate. Is that kind of what happened in some cases?
Well, I certainly think that was true with white women.
Yeah.
You know, the three cohorts that you see in the exit polls, and we got to wait for more data to come in. These are not highly exact. But I think Trump moved up like 4 or 5 percentage points with white women between 2016 and 2024. He moved up something like, I think, 8 points with black men. And with Latino men, it was more than 20 points. And with Latino women, it was substantial. I think Latino men, there's a huge Catholic cohort there. They are anti-abortion. I think that informed their vote. I think, you know, what you're asking, Michael, about the splitting the abortion ballot, I do think there was a number of women who were turned off by Trump's history as a sexual predator. He had been convicted of sexual assault, or found liable for sexual assault, and it was anti-abortion, but they felt they were traditional Republicans and they wanted to stay in the party, and ballot measures gave them the ability to split their vote.
Yep, fascinating days we live in here. Again, President-elect Trump nominating or putting up a lot of folks to fill out his cabinet. So we'll see how that plays out over the next couple of days. Tim O'Brien, Senior Executive Editor for Bloomberg Opinion, joining us here in our Bloomberg Interactive Broker Studio. We appreciate getting some of your time here. Looking at the markets here, the S&P off 7, Dow off 11, NASDAQ off 36. A little bit of a pause in this market after this rally after the election. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks in the red. The Dow, the S&P, NASDAQ, all lower as stocks struggle to make any headway on this Thursday morning following that furious post-election rally that spurred calls for a breather amid signs of buyer fatigue. Right now, we got the S&P down, little change, lower by 0.1%, down 8 points. The Dow down 13, down less than 0.1%, while NASDAQ lower now by 32, a drop of 0.2%. 10-year 4.40% with a 2-year 4.25%. Spot gold up $2.50 the ounce, $25.75, up by about 0.1%. West Texas Intermediate crude now up 34 cents a barrel, 68.77. That is a gain of 0.5%. Bitcoin down 0.2%, 88,450 right now on Bitcoin. A downgrade at Starbucks. Wall Street, you'll recall, applauded when Starbucks named Brian Niccol to head a rebound effort. 3 months later, the cheers are fading as Redburn Atlantic tells investors to dump the coffee chain shares. Starbucks today is trading lower, little change, down 0.1%. Also making news, McDonald's says it has identified an alternate supplier for about 900 restaurants that had stopped serving quarter pounders with slivered onions. That means the quarter pounders are back across the country. Right now, we got McDonald's up by about 0.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. John Tucker sitting in for Alex Steele here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, and we're streaming live on YouTube as well. So you can go to youtube.com, search Bloomberg Podcast, and that's where you will find us. John, on Thursdays, whether we like it or not, we talk to Barry Ritholtz because he is the host of Masters in Business on Bloomberg Radio. He's also got a day job. He is the founder of Ritholtz Wealth Management. Hey, Barry, we live in interesting times, that's for sure. How are you processing the last 7-8 days post-election here? The markets seem to be voting pretty decidedly.
Yeah, very much so. I mean, it's not a surprise for two reasons. First, just remember what happened in 2016. The initial reaction to the election of Trump was a little bit of market panic, and then people kind of stopped and said, wait a second, this guy is going to deficit spend and give us big tax cuts. That, you know, give me the old joke is give me $1 trillion in the stock market and I'll throw you a hell of a party. And I think the market is looking at it the same way. The 2017 Tax Cuts and Jobs Act, as much as it was criticized as being lopsided and primarily benefiting, depending on which study you look at, the top 1%, the top 10%, whoever, that is the Bloomberg audience. And so we are all going to see some form of tax cuts. Matt Miller told me he's going to buy another Porsche with his tax cuts. So,
oh, well, good for him.
So I think he's excited about it. But when you see this sort of flip in sentiment and business confidence and enthusiasm, not that the Biden administration or the Obama administration before and after the first Trump term didn't deficit spend, but there seems to be an acknowledgement that this is going to be a very business-friendly administration. And yeah, there are going to be some things that you're not going to be happy about, depending on where you live. But by and large, expect tax cuts, expect deficit spending, expect deregulation. And that usually is good for the stock market.
Barry, Paul pointed this headline out earlier. U.S. money market assets surpassed $7 trillion with a T for the first time. Is that money on the sidelines?
So the way we typically look at money on the sidelines is not what I think of in terms of money markets. What money markets have become not so much an alternative to equities, but an alternative to bonds. So a couple of years ago, the Fed began their interest rate hiking cycle, albeit late as always. Now we're beginning their interest rate cutting cycle, again, late. So do I want to reach for more yield with longer duration, hey, you're not getting paid that much to do it. And there's the risk that if rates go up, if inflation reflares, my longer term holdings are going to get hurt. So I want to say this summer in the money market account that my personal cash is sitting around in was yielding about 5.4%. I looked at it earlier this week. It's down to 4.75, 4.75. So that's a pretty decent sized move following a 0.5 point cut and a 1/4 point cut. Hey, what a coincidence. About 75 basis points is the difference. But I would otherwise, and I think a lot of money market investors would otherwise have that money in bonds, not so much equities. It's some arguable, some equity money comes into that, but I think it's at least the way we manage money. That's cash that otherwise would be in either individual bonds or bond funds.
Right. Hey, speaking of risk on appetite, animal spirits, I don't know how you want to phrase it. I guess, we mentioned Matt Miller. Let's go to Bitcoin. He's my poster child for Bitcoin. Boy, what a move it's had from 60,000 up to 90,000 here just in the last week or so. What does that tell you?
So the easy thing, so I'm going to give you an easy answer and a little more complex answer. The easy answer is the President-elect President Trump, that's a weird mouthful, isn't it? President-elect President Trump has a lot of ties to various people in the crypto world, and this is expected to be the first crypto presidency. And so there's some enthusiasm amongst traders for Bitcoin and some of the other coins. That's the obvious and simple answer. The more complicated answer is, what exactly are cryptocurrencies? Are they currencies? Are they commodities? Is it a new asset class? It's very hard to contextualize it. And what I like to tell people is, think of Bitcoin as a large cap tech stock. So where are we? About 1.8 trillion for Bitcoin. That puts it pretty much right between Facebook at about 1.4 trillion and Google at about 2.2 trillion, or I guess I should say Meta and Alphabet, but I'm old school.
No, yeah.
So I think of something like Bitcoin as a very large tech company, about half the size of Apple or half the size of Nvidia or Microsoft, but a large successful tech company, and they came out about the same time as Facebook did, and so over the past 15 years, this is what's developed. If you want to throw a few percent of your portfolio into some coins, Bitcoin, Ether, whatever, I don't have a problem with that. I'm a little reluctant to chase stuff when it's run up 20, 30, 40%. I assume there's going to be a better entry point at some point down the road. But it's like guessing at a single currency that has the market cap of a large tech company.
Can stocks run hot if inflation at the same time is running hot or hotter?
Sure. In fact, people don't realize stocks are one of the best inflation hedges there are. Just the problem in 2022 wasn't hot inflation. It was rising interest rates. That was the problem for bonds and stocks. But inflation, as Jeremy Siegel warned us in 2020, inflation was in large part caused by the combination of the shift to goods from services, the supply line chains, but the biggest single precipitant was $2 trillion in fiscal stimulus, the biggest stimulus since World War II as a percentage of GDP. And so stocks had a great 21 because, as we saw, companies not only pass along their input costs to consumers, and then some. They were able to expand their profits right into the inflationary surge. Everything that we see in nominal terms, you don't have to inflation adjust equities because their revenue goes up with inflation, and as we've seen, their profits go up. So I don't have a problem owning equities in a higher inflationary environment. The risk is if inflation gets too high and the Fed tightens too much, they can cause a recession, as we've seen in the past.
Is the Fed going to take the foot off the pedal a little bit going forward, Barry? Because, again, the economic data is pretty darn solid. We'll get retail sales tomorrow.
So, when it's funny, when we look at what motivates the Fed and where a reasonable level for rates should be, I can't help but think that they're noticing not just higher credit card debt and higher cost of buying automobiles, both of which are impacting one of their two charges, namely keeping employment as high as possible. But the biggest issue in the overall economy is the lack of affordability of houses and high rents, a lot of which has been driven by the golden handcuffs of the 2.5%, 3.5%, 4% mortgages. So when rates were really low and mortgages had become so cheap, everybody on the corporate side, everybody on the household side, literally everybody but Uncle Sam refinanced their debt. And so if you have a mortgage at 4%, I think something like 60% of all mortgages are 5% or less these days, and only about half of the homes out there have mortgages on them. But that supply is not in the marketplace because, hey, if I want to move, I'm a newlywed couple with one baby and a second on the way, and I want to move from a small 3-bedroom to a larger 4-bedroom. Well, yeah, maybe the 20-30% uptick in the price of the home is a concern, but the bigger concern is I can't go from a 3.5% or a 4% mortgage to a 7.5% mortgage. So I think if the Fed wants to gradually bring rates down with the hope that mortgage rates will follow, and that will eventually free up a huge amount of home inventory supply. Not only did we underbuild homes for the decade after the financial crisis, decade and a half, but so supply now, the amount of real estate, this varies region to region, but it's half or in some places a quarter of what supply was like in the pre-pandemic era. And, that's economics 101. A whole lot less supply means prices are going higher.
Barry, always informative, checking in with Barry Ritholtz. He's the host of Masters in Business on Bloomberg Radio, founder of Ritholtz Wealth Management. He also owes us another book, and I understand he's on the last chapter of the new book. Manuscript goes in Friday, so we'll be getting some more stuff out of Barry. Always some good stuff here. Looking at the markets here, just not a whole lot going on the index level. Everybody's taking a little bit of a breather here. We've had a bad run up in risk assets, stocks, crypto, you name it. The S&P is pretty much unchanged. Same for the Dow. The Nasdaq's off about 28 points. I will call out WTI crude oil just a smidge higher, but still below $69 per barrel. Gold taking a little bit of a breather here, $25.77 an ounce. And Bitcoin, it's off about 0.3%, $88,000 per token. We're going to have more coming up. Jason Kelly, Bloomberg Originals, he's the chief correspondent over there. He's going to give us the latest episode of his podcast, The Deal, with Alex Rodriguez and Jason Kelly. That's coming up.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got equities wavering near records. The S&P, though, down today, lower, little change, down about 0.1%, down 4 points now, 59.80 where we stand on the S&P. The Dow lower by 1 point, has been swinging between gains and losses right now at 43,958, up now by 1 point. NASDAQ down 15, drop there of 0.1%. 10-year 4.40% with the 2-year 4.26%. Spot gold up 0.1%, 25.75 the ounce. West Texas Intermediate crude oil up 0.3%, 68.62 a barrel. And Bitcoin just about flat on the day at 88,667 on Bitcoin. Among the day's economic data, weekly jobless claims down for the 4th time in 5 weeks. And with that story, here's Bloomberg's Vinny Del Giudice.
The government chalks up 217,000 initial jobless claims for last week. That's the lowest reading since May. New claims are now running below the average of the past 2 years. The data imply healthy demand for workers after recent hurricanes, the fallout from the Boeing strike, and presidential election anxiety. The total number of American workers on unemployment is also down. Vinny Del Giudice, Bloomberg Radio.
Disney shares now up 6.8%. This morning, Disney posted fiscal fourth quarter sales and profit that beat Wall Street estimates. It also forecast earnings growth for the next 3 years, a rare event for a company that historically has not made long-range profit projections. Again, Disney now up by 6.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. John Tucker sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. Boy, I hope she comes back on Monday like she's supposed to. John, I love you.
What are you saying?
I love you.
Wait a second.
But I'm telling you here.
I'm
All right, John.
mildly offended.
Exactly. On the latest episode of The Deal, Alex Rodriguez and Jason Kelly, they sat down with former WNBA player Sue Bird about the state of women's sports, her growing media portfolio. Take a listen.
I think we've all seen, anecdotally, but also empirically, is this rise in viewership. So how do those viewership numbers affect you?
Honestly, it's just kind of like a big I told you so. Like, oh, if you invest in this. Because for me, the story of the WNBA, like, if I were to be like super simple about it, was look where we got without any investment. Now imagine if you invested in it.
All right, that was our very own, listen, Jason Kelly speaking with Sue Bird, WNBA. Jason, thanks so much for joining us here. Jason Kelly, Chief Correspondent for Bloomberg Originals. I don't know if it's Caitlin Clark or what, but noticeable uptick in interest. And I think a lot of women's sports. What's going on out there?
Totally. I mean, you're exactly right. Everyone's noticing it. It's been a long time coming.
Yeah.
I think in a lot of ways, when we talk to people like Sue Bird, we had Candace Parker, another former WNBA superstar, on the program last week. The W specifically feels like an overnight sensation after 28 years, as they say. It's been a slow build. They needed an unlock, and Caitlin Clark and Angel Reese really were that unlock. It started in the college game, which has always been very strong. On the women's side, you think about the dominant teams at UConn and Tennessee and more recently South Carolina. Now it's translating to the W. People are showing up. And what longtime proponents of women's sports would say is the demand has always been there. The dig has been, nobody's watching it. The reality is once you put it on air, people are watching it, and so the numbers really bear it out.
That's the metric from viewership and listenership. Are they ever going to achieve parity with men?
In terms of pay?
In terms of pay.
Yeah, I mean, that is the big question, right? One very interesting byproduct of this particular WNBA season is that after this big surge in ratings and viewership, you had sellouts across the WNBA finals, which the New York Liberty, based in Barclays Center here in New York, they won. They beat the Minnesota Lynx, and in both stadiums, full houses. What happened after the season even with a new media deal, is the players basically walked away from the collective bargaining agreement. They have a year or so, year and a half to figure it out. So they're demanding more pay. The reality is that, as you guys know, and Paul Sweeney knows this better than anyone, team valuations are driven by media deals. I mean, that is the main component of that. Right now, the media deals are not anywhere close to what they are for the NBA or other men's sports like the NFL, even the MLS on the soccer side. So that needs to catch up, or they need to figure out different ways to, bring more revenue in before they can get the pay to anywhere close to parity.
And I think some of the reported, Jason, on that media rights deal, they are going to get a new media rights deal.
Yes.
But I also saw the reporting that it's going to be a long-term deal, like a 10-year deal. If I were advising them, I would say do number of short-term deals. Yeah. Do not lock in to a 10-year deal, because if you're bullish on your sport, and I think there's good reason to be bullish on the WNBA, I'd want to do a 3-year, 5-year deal so I have the ability to reprice it. Because that's actually what happened to NASCAR 20 years ago.
Great point.
And they did very, very smart deal. Are they thinking that way? How are they thinking about it?
They're definitely thinking about it. I mean, I think you also have a really interesting dynamic in the WNBA because it is partially owned by the NBA and its owners. Right. It's partially owned by the WNBA. There are some outside investors. They have a commissioner in Kathy Engelbert who used to run Deloitte. Super smart commissioner. Okay. She knows the business world. So it's really going to be a matter of her and the ownership getting together. One really interesting element of that, and we talked with Sue about this, the ownership of the Liberty is Clara Wu Tsai and Joe Tsai. Clara Wu Tsai has really taken this on as her project. You need ownership like that. That's what made the NBA what it is today. Yep. You think back to Jerry Buss in the 80s, and that revolutionized a league that practically went out of business. So this is a key moment for the WNBA. The other really interesting thing, when you think about the Sue Birds of the world, you now have these very business savvy former players who are driving into ownership themselves. Sue Bird played her entire career for the Seattle Storm, and basically almost immediately after she stopped playing, Seattle Storm ownership approached her and said, we want you to be part of this ownership group, which she is. And so those sorts of people driving those decisions is going to make a big impact.
What are her other businesses?
So most notably, she has a media company that she started called Together. She started that with some other athletes, including Alex Morgan. They are creating specifically media content around women's sports, trying to create again, I'm speaking Paul Sweeney's language here, the shoulder programming that doesn't exist as much in women's sports as it does in men's sports, to try and, again, increase viewership and also make money in other ways.
In other ways, like what?
So the most interesting product, actually, that's come out of Together is a T-shirt that you have probably seen.
Kind of low tech.
That says, everyone watches women's sports.
Yeah.
It blew up. And Sue tells the story of how the T-shirt came about on the episode, so I won't completely spoil it. But what I will say is, you go to any National Women's Soccer League game, you go to any WNBA game, or you watch it on TV, tons of people, celebrities, Jason Sudeikis, Aubrey Plaza, they're wearing these T-shirts, to the point where when they went to the Olympics this summer, they actually translated it into French, and it was like the hottest selling T-shirt at the Olympics in Paris.
That's great. All right, Jason, thank you so much. We appreciate it. Jason Kelly, he is a chief correspondent for Bloomberg Originals, and talking about the latest episode of the podcast, The Deal, with Alex Rodriguez and Jason Kelly. This is the 7th of 12 episodes of the second season of The Deal with Alex Rodriguez and Jason Kelly. This episode will air on Wednesday, November 13th. That was yesterday.
Yeah, it was.
Okay, very good. At 8 p.m. on Bloomberg Television, 10 p.m. Please note the final 5 episodes of Season 2 will be in January 2025. So good stuff there with Alex Rodriguez and Jason Kelly. So keep an eye on that, John. Women's sports.
Big back catalog to listen to if you,
big
you
back
want to go
catalog.
back.
Back catalog. That's how you can do it on podcast. John, did you know that?
It's on demand, John.
Yeah.
I know what a podcast is. All right?
Podcast of the
Stop
future.
it.
Podcast of the future. So that's kind of where
Which
we're
is
going with
why
it.
I'm here.
Exactly.
Not doing this with you.
S&P 500 off 9 points, Dow off 58, NASDAQ off at 27 as well. Bitcoin, it's now up 200 points, just under $89,000 per token. WTI crude oil, it is flat on the day, just above $68 per barrel. We're going to have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, we got John Tucker here in for Alex Steele. I'm Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. YouTube.com. Just search Bloomberg Podcast, and that's where you'll find us. That's where the advertisers are going. Advertisers are going to advertise the digital media. Think Facebook. Think Google. Think even YouTube is a huge business in terms of advertising spend, and we're there, which is a good thing. So
I'm just dying to know what counts as innovation in the ad space these days. Is the short-term videos, the videos that I see?
I think that better targeting, that's kind of always the holy grail. So you want somebody advertising grills to a guy like you, right? You're the grill guy, and you're
grill
like
guys
do-it-yourself guy,
or
do-it-yourself
videos
guy.
where the most effective for me, the things that I'm interested, like woodworking, where it's a show and they're using a piece of equipment and giving it the run through, and I'm like, you know what, I gotta have that.
Gotta have that. That's how it works. Mark Douglas, President and CEO of Mountain, he joins us from Miami via Zoom thing. Hey, Mark, we actually had a really interesting data point on the global media, global advertising space today, last night with Disney. Their streaming business is turning profitable and like really profitable. What'd you take away from the Disney numbers?
Well, I'm not surprised. I think what you're seeing happen is the second half of 2024 and now going into 2025, essentially all of the streaming networks have largely reached the tipping point of being like streaming first. Like that's where all their sales effort is focused. They're focused in advertising, as you guys were mentioning, the innovation and things like that. And I think Disney is right there at the head of that pack, really focusing their business on streaming, and advertisers are responding, and basically the growth and profitability that's resulting from it is a direct result of that. So they're at the head of the pack right now in terms of that kind of growth.
Mark, are they hanging on to linear TV to satisfy old people like me?
Yeah, I mean, obviously they still own the assets, but every conversation I have with every streaming network, they just want to talk about streaming. I think they see linear is obviously it's a revenue stream for it, but it's not the meetings they're having as to how do they better monetize linear. It's all about audience first, which what we're talking AI to help identify the right consumers and making all of that available to brands and doing it on the biggest screen, on 55-inch screen, 65-inch screen, as opposed to your phone, which is like a 5.5-inch screen.
It's interesting. I was reading some research on the Walt Disney Company this morning from Laura Martin at Needham & Company, and what she does, and she says investors should think this way, is just kind of mush together the digital streaming business with their linear. And what's going to happen over time is the digital business is going to become a bigger percentage of that, streaming business, of that business, of the video business. And you're going to see the growth rates just accelerate over time as linear gets smaller and smaller. Who else out there, Mark, do you think is going to be a really viable player out there? I'm not sure everybody who's out there in the marketplace can survive here. How do you think it's going to shake out in the streaming wars?
Yeah, I mean, we've talked about this before. I mean, it's really easy to figure out who's going to survive and thrive, which is you just play a game where, one person names a network and another person tells you why they would go there and watch. So I say ESPN, you say sports. If I say Netflix, you would say, comedy, documentaries, new shows every Tuesday. If I say CBS, there's probably a pause in the conversation. It doesn't mean CBS is going to go away, but it's certainly going to be more challenging for them. And there are a number of networks like that. And so, I mean, the people with a brand with a clear reason to want to go and watch content there and be entertained there are going to thrive, and the others are going to be challenged and probably ultimately become part of some of those other brands. And I think in terms of the advertising, extend the question there, I think Netflix is, I don't think people fully realize how big a backlog they're building right now. So half of all new subs are for their cheapest package, which is ad supported, but they're not really serving that many ads relative to the number of subscribers. So they're building a huge revenue backlog that's going to get unlocked as they get as good as everyone else in monetizing. And I think that's going to, I'm super long on Netflix right now, meaning like if there was any stock I would want to invest in, it would be Netflix. And I'm not that far behind on Disney, although, Disney has parks and other things that make it a bit harder to, bet on the future.
Can you close out real quick? What is the state of the digital ad business right now from your perspective?
Yeah, it's very healthy. I think overall, the best part of digital advertising is the long tail, mid-size and small companies. That my own company, Mountain, that's what we focus on, is bringing those small, mid-size advertisers into the streaming television world for advertising for the first time. And I think all these streaming networks have really woken up to how that's an opportunity. I always like to say it's really easy. There are two ways to grow a business. You can grow the number of customers or the revenue per customer. And the TV industry for a lot of years did neither of those things. And so now I think they're waking up. They've woken up to, we need to grow the number of customers, and in streaming there actually are some ways to grow the revenue per customer. So that's why I think it's, the media world is actually getting reinvigorated with growth right now.
Mark, thanks so much for joining us. Always appreciate getting a few minutes of your time. Mark Douglas, President and CEO of Mountain. He's based in California, but he's down in Miami. Well, how come all the smart young folks are down in Miami, John? And they're not in Sheboygan. They're in Miami, they're in L.A.,
and here we are stuck in a hermetically sealed booth with each other.
Exactly right. That's what the smart people do. Mike McGlone, they're all down in, I guess, Florida. That's where the smart kids are. John, thank you so much for sitting with us today. Appreciate it, as always. Alex Steele.
Maybe I'll be back tomorrow. Who knows?
You never know. Tom Keenan and I, we're going to be in Boston tomorrow, so you'll hear us up there. We're going to be at the Boston Fed, so that'll be good. Coming up, the Balance of Power with Joe Matthew is next, right after this news update coming your way. This is Bloomberg.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Republicans in Congress are handling questions about President-elect Trump's move to tap Matt Gaetz for Attorney General. South Carolina Senator Lindsey Graham.
Elections have consequences. He chose Matt Gaetz. Matt will come before the committee, and he will be asked hard questions, and we'll see how he does.
What do you think of him?
I voted for a lot of people I didn't like.
What do you think of him, though? What's your response to him?
I think he's very smart.
The CBS's Caitlin Huey-Burns says Gaetz, now a former congressman, had been investigated by the Justice Department but not charged, and was under the microscope of the House Ethics Committee.
He resigned pretty abruptly. CBS News confirming that the ethics report was about to come out about him. Now, that will not be published, at least by the Ethics Committee, now that Gaetz is no longer a member of Congress.
CBS's Linda Kenyon tells us conspiracy theorist Alex Jones vows legal action after an auction of his empire.
It's a satirical news publication.
You're watching the Onion News Network, a hacksaw of news.
But it's no laughing matter now that The Onion has bought the conspiracy theory platform, including the InfoWars website and social media accounts. Alex Jones was ordered to sell off InfoWars as part of bankruptcy proceedings after he was sued by the families of the 2012 shooting victims at the Sandy Hook Elementary School. Jones repeatedly called the shootings a hoax.
Ford Motor Company has been hit with a major government fine, $165 million for going too slow on a recall of rear-view cameras. Reporter Jeff Gilbert of WWJ Radio Detroit.
The fine is the second largest of its type. Ford will also review all of its recalls over the past few years to determine if any need to be updated. Ford has also agreed to be monitored by an independent party for the next 3 years.
A system forming in the Caribbean that forecasters expect to intensify into a tropical storm is being watched. Weather Channel meteorologist Stephanie Abrams.
It will eventually make its way into the Gulf and could impact Florida next week. Thankfully, the models have come down on intensity. That said, if you live in the Sunshine State, I still keep a close eye on it.
Lindsey Vonn says she's coming out of retirement to rejoin the U.S. ski team in an attempt to race again at age 40.
This is classic Lindsey Vonn.
Lindsey Vonn, there we go, and the arm gets caught, and she barely pulls it out.
Vonn's career has featured thrills and spills. The three-time Olympic medalist had knee replacement surgery earlier this year. Wall Street, right now the Dow is down 107 points. The S&P is down 16. This is CBS News.
.77.
The new movie sequel is getting lots of attention.
Rome has so many subjects. She must feed them.
They can eat more.
Gladiator 2 star Denzel Washington didn't know what to do when he came face to face with King Charles at the world premiere in London last night. So the monarch grabbed the actor's hand and shook it after asking about his character in the movie. Washington told him the villainous Macronus is a lovely chap. Airbnb and Paramount Pictures have partnered to offer a gladiator experience inside the Colosseum in Rome. Winners will suit up in battle gear and fight in front of their guests. Deborah Rodriguez, CBS News.
The social media platform Blue Sky says it's gained 1 million new users in the week since the presidential election. It's seen as a backlash against Elon Musk and X, the number of accounts now hitting 15 million. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
So who will be next? Welcome to the fastest show in politics as Washington reels from the latest round of appointments from Donald Trump with some big ones yet to drop. Maybe that'll happen today. We'll get the latest this hour from Bloomberg's Mike Dorning, and we'll have an important conversation with Democratic Congressman Dan Goldman of New York. He's up with a resolution in the House today to reaffirm term limits for the next president. We'll have him explain why. Carrie Lake concedes. That's a headline in itself, isn't it? We'll talk about the final tally here in Congress and the new leadership following elections yesterday with our political panel. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano today, alongside Republican strategist John Seaton of Echo Canyon Consulting. So let's get to it. As always, we set the baseline at World Headquarters in New York with Charlie Pellet, his eyes on the markets. Charlie?
Thank you very much, Joe Matthew. Indeed, here's what's going on. We've got U.S. stocks trading a little change right now with the Dow, the S&P, NASDAQ, they're in the red. S&P down 16, 59.69 where we stand right now. That is a drop of just about 0.3%. Your Dow Jones Industrial Average down 102, decline there of 0.2%. And NASDAQ down 43, a drop there of 0.2%. Broad-based sell-off here with the Russell 2000 Index. Small cap shares down by about 0.7%. The 10-year at 4.40%. The 2-year 4.26%. Gold little changed, up $1 the ounce now to $25.74. West Texas Intermediate crude 68.60 a barrel, up 0.2%. And Bitcoin up 0.5%, 89,090 on Bitcoin right now. Bottom line here, the Dow, the S&P, NASDAQ all struggling to make headway. Wedbush Securities is raising its price target on Tesla to $400 from $300. Senior analyst Dan Ives was a guest this morning on Bloomberg Surveillance. He told us you cannot ignore Elon Musk's role in the Trump administration.
This is a poker move for the ages that Musk made on Trump, and now him and Tesla are going to just be significant beneficiaries.
And today, Tesla down by 2.5%. You can hear more of the conversation with Dan Ives of Wedbush on the Surveillance podcast. You can download it wherever you get your podcasts. Again, recapping the Dow, the S&P, NASDAQ, all lower. S&P down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues. Back we go to Washington. And once again, here he is, your host, Joe Matthew.
All right, you know it's real when you hear the voice of the New York subway, Mr. Charlie Pellet. Thank you so much. With his eyes on the markets, we'll get back to Charlie a little bit later on this hour to see how stocks, bonds are faring here, as we also wait for more news in Washington from the Trump transition team. Remember, I know your mind was blown yesterday, but we still have some big ones. We need Treasury. We need health and human services. And both of those will be big news when they break. As we follow the bouncing ball in the House of Representatives, we're almost there. What do we have? Nine races left to be called a week and several days later. We told you that was going to happen. It's California, right? Final tally, though. Check this out. As Donald Trump continues to pluck Republicans from the House of Representatives, the final tally when this is done could be a GOP net gain of a single seat. And so Mike Johnson, the Speaker of the House, fresh off leadership elections yesterday, sees and feels unity with his very thin margin, wafer thin. Here's the Speaker of the House.
The theme that you'll hear over and over from all of our members across the conference is that we are unified and energized and ready to go. Serious times call for serious leadership. It's going to be a policy agenda-driven administration and a Congress, and you've heard us say many times that it could be, I believe it will be, the most consequential Congress in the modern era, most consequential administration in the modern era, because frankly, we have to fix almost every area of public policy.
Beginning with funding the government. Remember, we've got a funding deadline on the 20th of December, and that's where we start our conversation with the gentleman from New York. Dan Goldman is here, the Democrat from New York's 10th Congressional District, the force behind the Bagel Caucus. Congressman, it's great to see you. Welcome. It's pretty clear that once again, Mike Rogers is going to need Democrats to get anything done. How much support will the Democratic Conference give him on things like funding the government?
Well, it really depends, Joe, and just as it depended in the last Congress when Democrats stepped up to be the adults in the room and make sure that we kept the government open. We passed a budget. We provided much-needed supplemental security assistance to our Democratic allies around the world. There will be a thin majority, probably less than what it was in the last Congress. And it really depends on which way this Republican Party wants to go. I am encouraged to hear Speaker Johnson say that it will be a policy-oriented Congress. Donald Trump's Project 2025 and some of his initial nominations for cabinet posts reflect an unserious, non-policy-oriented approach. And that will really determine what Democrats are going to do. If Donald Trump is going to try to dismantle our democracy for his own personal retribution and personal gain, he will not find any cooperation from Democrats. If he wants to focus on policy and fixing the border, addressing our economy, he very well may have partners in the Democratic Party. But it really is on them to figure out which path they want to go.
We had Kevin Roberts in a couple of days ago, the head of the Heritage Foundation and one of the forces behind Project 2025, which you just mentioned. He's someone who's trying to get back in from the cold, it seems, and you know the Trump camp disavowed much of that plan. When you talk about dismantling democracy, are you talking about Schedule F or some of these other ideas in 2025? Just what should our audience know that you're referring to? Because I haven't seen any sort of real proposal on that front yet.
Yeah, I mean, I think it's a combination of things, Joe. Schedule F, which for those who don't understand, would allow career expert government employees to be fired at will and potentially replaced by political loyalists who are unqualified and incapable of actually running the day-to-day government. What that will do, and we've seen it a little bit from the nominations of Tulsi Gabbard and Pete Hegseth and Matt Gaetz, is it will turn these executive branch agencies into political arms of Donald Trump. And that will undermine our national security. That will weaponize the Department of Justice to go after Trump's enemies and allies. Matt Gaetz will execute that to Donald Trump's wishes. It will allow the military to be used, for example, to disperse a protest on the National Mall that Donald Trump doesn't like. And it will really undermine our intelligence community if Tulsi Gabbard, who has very untoward relationships with Assad and Putin, oversees our intelligence community. So that's a big part of it. But we're also talking about getting rid of the Department of Education. We are talking about yanking certification for mifepristone, medication abortion. We are talking about rolling back all of the incentives and subsidies for renewable energy. And the list goes on and on and on. Those are more policy decisions, but combined with Donald Trump's personal revenge tour and his authoritarian rhetoric, there's a real danger that the basic foundations of our government are going to be destroyed.
Well, it brings us to our resolution, and I do want to just say, I realize that you have concerns, Congressman, but we haven't seen any formal proposals on that front. He's not in office yet. We're ready for whatever happens. But you're up with a resolution to make sure that he only serves one more term. This is something that you're introducing today in this session of Congress. Mr. Goldman of New York, I'm looking at it in front of me here, submitted the following. Referred to the committee, resolution reaffirming the validity and applicability of the 22nd Amendment, whereas President-elect Donald Trump told Republican members of the House on November 13, quote, "I suspect I won't be running again unless you say he's so good. We've got to figure something else out," unquote. Now, a lot of people thought that was a joke, Congressman. You took it seriously enough to draft this. Reaffirming the 22nd Amendment applies to 2 terms in the aggregate as President of the United States. This is already in the Constitution. What makes you think you have to do this?
Well, I've been following Donald Trump very closely for the last 5 years, Joe. As you know, I was the lead counsel on his first impeachment investigation. And I know how he operates. And how he operates is by floating trial balloons that he often claims are jokes. But he's very serious about it. And he's been talking about staying on past this next term for years. He's made numerous references to it. And the way that he operates is that things start as a joke, then they become normalized, and then he tries to do them. And so this is simply just to call on Congress to reaffirm that the 22nd Amendment, as it clearly states, applies to Donald Trump and non-consecutive terms, 2 terms in the aggregate. It is plainly written in the Constitution, but there is enough talk about it from Donald Trump, from others who support him. Lauren Boebert made a reference to it last week. There's enough talk about it that it is imperative that we very immediately and very clearly stand up and say, this is what the Constitution says. Republicans in Congress, are you for the Constitution or are you against the Constitution? It should be very easy for them because it is very simply what the Constitution says. But unfortunately, if Donald Trump does not believe in the Constitution, all too often Republicans in Congress go along with them. And if that is the case for the next 4 years, our Constitution will be sorely undermined.
So you're calling on lawmakers essentially to support what has already been written here. You mentioned Matt Gaetz, and I do remember, if we can go back a couple of years here, December 2019, House Judiciary Committee, you had quite a throwdown with Matt Gaetz over the impeachment of Donald Trump. He called you out as the majority's witness and counsel. In addition to being a Democratic donor, I'm looking at a news release that Matt Gaetz's office kicked out that very day as they describe you as frequently attacking the president on Twitter. Was that the beginning of Matt Gaetz's trajectory to becoming Attorney General?
I don't know whether that is or not. I think, you know, I've worked with Matt Gaetz now for 2 years. I've seen how he operates. I've heard what he believes. He is a burn down the house kind of member. He wants to burn down the Department of Justice. He wants to eliminate the FBI. He wants his own personal retribution and revenge against the Department of Justice because they went through an extensive criminal investigation of him. So he is the exact wrong person to run an institution that is so important to the orderly interpretation and implementation of our laws, our criminal laws, our civil laws. This is about as bad of a pick as one could imagine, because Mr. Gates just literally wants to tear it down, and he will turn the Department of Justice into Donald Trump's personal attorney, which is not what it is designed to be.
This even gets out of the starting gate here. Congressman, thank you. Dan Goldman of New York with an important headline that relates to the gentleman from New York City. Congestion pricing, here it is. $9 a toll to start in January, according to the governor. We'll have more on it coming up right here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story, just getting word that New York City congestion pricing with a $9 toll will start in January. That toll will provide $15 billion in funding for the MTA system. Governor Hochul slashed the tolling structure by 40% from the prior plan. But again, headline right now on the Bloomberg Professional Service, New York City congestion pricing plan with a $9 toll will begin in January. The Dow, the S&P, NASDAQ, they're all trading lower right now. Stocks lost steam following that furious post-election rally that spurred calls for a breather amid signs of buyer fatigue. Here's where we stand. The S&P now down by 22 points. That is a drop of just about 0.4%. The Dow down 139, a decline of just about 0.3%, while NASDAQ also lower by 0.3%. 10-year at 4.40% with a 2-year that is currently yielding 4.26%. Spot gold down $2.60 the ounce to $25.70, a drop now of 0.1%. And West Texas Intermediate crude, we'll call that flat on the day at $68.41 a barrel. Bitcoin now higher by 0.4%, 88,973. Barclays sees airline stocks taking off next year. It says a convergence in improving fundamentals and investor sentiment may drive a powerful rally for airline stocks next year. Among some of the airline names today, American up by 3.2%, Delta up 0.7%, and United up by 2.5%. All of this on a down day for the U.S. equity market, with the S&P down now by 0.4%. Again, repeating our top story, the New York City congestion pricing plan with a $9 toll will start in January. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues. Once again, your host, Joe Matthew.
All right, Charlie Pellet, thank you so much, and thank you for the heads up on the congestion pricing. That's something we'll talk about a little bit more later on. This has been on again, off again. I guess I need to start parking above 60th Street. Is that the deal when I go to World Headquarters? In the nation's capital, of course, we don't have that trouble quite yet, at least, and we are live in Washington here on the fastest show in politics. You have to be nimble these days with the way the news has been flying, and yesterday was a big one. Yeah, we had the Trump appointments. We also had leadership elections for Republicans on Capitol Hill. The new Mitch McConnell is named John Thune, the senator from South Dakota, held forth with the cadre of leaders outside the Ohio clock yesterday in the Senate. Listen.
What we're going to do is make sure that we are processing his nominees in a way that gets them into those positions so they can implement his agenda. How that happens remains to be seen. You know, obviously, we want to make sure our committees have confirmation hearings like they typically do, and that these nominees reported out to the floor. But I've said this, and I mean it, that, we expect a level of cooperation from the Democrats to work with us to get these folks installed.
And we'll see how much cooperation they get on some of these names, beginning with Matt Gaetz. Not sure John Thune saw that one coming when he made that statement. By the way, if you're with us on YouTube right now, and you can always find us there, search Bloomberg Business News Live. You'll see what's happening in the studio, and in this case, in the Senate. John Thune standing there next to John Barrasso, that's your whip, Tom Cotton, your conference chair, and Shelley Moore Capito, the senator, will be with us in the late edition of Balance of Power at 5:30 p.m. Eastern Time, number 4. That's the new lineup as Mitch McConnell, I guess, goes down to the rank and file. Still can't quite understand that move. But sometimes times like these call for a bit of experience, and that's why I'm glad that Mike Dorning can join us here, who's covered a couple sessions of Congress, never quite one like this, from our newsroom here in Washington, D.C. Bloomberg Deputy Congressional Editor is your actual title, right?
Yeah.
But he's like the guru for us, because Mike's done it all. It's great to see you.
Great to be here.
Sometimes the business cards don't always reflect everything. This is fascinating. I'm not even sure where to start with you, but we may as well start with John Thune. Is this a be careful what you ask for moment? As soon as you're installed, Matt Gaetz is dropped in your lap?
Yeah. Well, when you do that job, you're going to get the hard stuff. That's the job of the Senate Majority Leader. And it is going to be stretched, this idea of how much the Senate's willing to tolerate in terms of appointments that they'll confirm. There's kind of two views in Washington on this. One is the sort of conventional wisdom, the way Washington's worked for decades. Maybe Matt Gaetz is a sacrificial lamb. You throw out a very tough to confirm person to kind of take all the fire so you can get your other controversial people through, and then follow them up with someone a tick less controversial. Yeah. But then the sort of new calculus may be that, this is a loyalty test. I'm Donald Trump. Everyone needs to be loyal to me. And now you got to do this and show your loyalty, or I'm going to come after you. So we don't know which way this is going to go, but those are kind of the two reads in Washington.
Well, it brings up this question: is John Thune the only real check on Donald Trump? I mean, he's a Republican. He's professed support for the Trump agenda, but he's the closest thing to establishment we've got on Capitol Hill now in the leadership.
Well, there's two real checks. One is, whatever four Republicans are least comfortable with this nomination could essentially block it. And then the question becomes, John Thune hasn't quite committed to this idea of recess appointments, which is essentially a way of getting around the Senate on confirmation.
Is that what Trump meant? Is that why he called for this? Because he knew Matt Gaetz was coming?
I don't know if he knew Matt Gaetz was coming, but he basically called for this because he was like, I don't want you guys messing around with this advice and consent stuff. You do what I want.
What a thought.
And if you don't, I want to be able to make a recess appointment. Now, just for like our listeners who are not
please,
Washington geeks, a recess appointment is something that's allowed in the Constitution. If and the courts have interpreted this, if they're on recess for more than 10 days, then you can appoint someone without confirmation until the end of the congressional session. But Congress has generally sort of stayed in a quote-unquote fake session so that they make sure that there's never really a recess for, since Barack Obama was president.
So it's going to be someone's job to sit there for the next couple of months and make sure that doesn't happen.
But what Trump has demanded of his Republican Senate leadership is that they don't do that. That's what he means when he says allow recess appointments. And it'll be up to Thune and the leadership to decide if they are going to actually have a recess and let him push all these things through. Thune has to, though, keep his members happy. If his members get unhappy with him, then his life is miserable.
A recess appointment, essentially, you lower the threshold required to.
Yeah, it's just like whatever the president wants, he gets.
So here's something else we learned about Matt Gaetz. Heads explode early in the day when this breaks. How could this be? Could he be confirmed? Then Mike Johnson hits the podium and says, oh, and by the way, he's already resigned. Which brings up a couple of more questions. Number one, how does he maintain a majority here? We can go there in a minute, but that essentially defangs this ethics investigation into Matt Gaetz. They were going to vote tomorrow on releasing the report. Tomorrow. He's just resigned yesterday, I guess, or a couple days ago when this first emerged. Does that mean we never see the report? He's in the clear because Dick Durbin, who chairs Judiciary next door in the Senate, says he wants to see all the details, all the evidence gathered in that investigation.
Now, in theory, if he's no longer a member of Congress, they don't necessarily need to release the ethics report, and they don't need to do what the Senate tells them to do. They're the House. But as you and I know in Washington, sometimes documents have a way of leaking out, and Matt Gaetz is not beloved even by House Republicans, and he's caused a lot of problems for a lot of people. It's possible that one of them might stick a shiv in his back on his way out.
So this thing's in the tip sheets tomorrow morning.
I mean, I would say there's a real possibility of that. We don't know. I mean, the ethics committee members and staff might just keep that silent. But it's also possible he has a lot of enemies. So
no doubt. We've got breaking news. It's not about congestion pricing this time. We've got news from the Trump team. It is not an appointment. It's news on the EV tax credit, Donald Trump's promise to unwind the IRA. Trump team plans to kill the $7,500 EV tax credit. According to Reuters, not a surprise. They saw it coming. How does he do this while Elon Musk is his best friend in politics?
Well, also, you technically need to get that through Congress. So if he's really serious about doing that, he would probably try to do that through the tax package when he's trying to get his tax cuts and offer that as a way to pay for things. There are things that he can do as president, not to eliminate that tax credit, but to make it hard for people to take it. And one way he could do that would help Elon Musk is to increase domestic content requirements because Tesla EVs have more domestic content than their competitors. So if you could kind of move that bar up, then you'd start to exclude more and more competitors to Teslas.
Makes a lot of good sense, though. I will say Tesla shares are down almost 4% now, more than $12 on this news.
Yeah, because people had thought,
instant reaction.
People had thought because Elon Musk joined the administration that the tack they would take is something that preserve Tesla's eligibility
to your point,
for
still
them.
may.
They can do it.
This is a knee-jerk reaction to a headline.
But Trump can only do that if he wants to do that.
Right.
I mean, if Trump doesn't want to do that, the regulators work for Trump. So
How true. The other idea, by the way, is that Tesla's been on a tear lately that forget about EVs and buying cars right now. Donald Trump will greenlight robo-taxi, that when we start cutting regulations in this country, robo-taxi becomes a reality. Tesla becomes a whole new company, and all of this is, of course, speculation. Do we expect, we've got what, Treasury and Health and Human Services, the next two big ones. Scott Bessent supposedly leading the charge for Treasury. After seeing Matt Gaetz, Tulsi Gabbard, Pete Hegseth, do you think we get RFK Jr. in this cabinet?
I don't think, from the signals that we've seen so far, RFK Jr. would be someone who's in the White House in one of these czar roles in some way, shape, or form, so he doesn't have to go through Senate confirmation. You know, they could change their minds and appoint him like something, but more likely he'll be in one of those powerful roles in the White House. Treasury, I don't know that you're necessarily going to see someone that far out of the mainstream in Treasury, because Donald Trump is a little bit more comfortable with conventional Republican outlooks on taxation and regulation of the economy. His big break with the establishment Republicans is on tariffs and free trade.
His favorite word in the dictionary. We've just got a minute left, more like 30 seconds, actually. Do we get a stopgap through March, or are they going to push this thing through September in the House?
I mean, that's up to the Republicans. You would think,
odds, though, is that even realistic?
My odds would be it's going to be a lot easier for Trump and the Republicans if they just do it through September, because you want to hit the ground running, get as much as you can done. You don't want to be like weighed down by getting another supplemental spending package through. But if the budget hawks and the party have their way, they could give that opportunity up.
Mike Dorning just said that. Exactly what Mark Molinaro told us yesterday, the Republican from New York. September, heads will explode in the Freedom Caucus. We'll have a lot more next from our panel on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that the Trump team plans to kill the $7,500 EV tax credit. That, according to Reuters, right now we have got shares of Rivian. They are plunging by 10%. Ford, an EV maker, paring its earlier gains, down 0.2%. Tesla right now down by 3.8%. Again, developing story headline right now on the Bloomberg Professional Service. The Trump team is planning to kill that $7,500 EV tax credit, that according to Reuters. The other developing story, the fact that the New York City congestion pricing plan with a $9 toll will begin in January. The Dow, the S&P, NASDAQ, all trading lower now. S&P 500 index losing steam, down 18 to 59.66, a drop now of 0.3%. Equities pulling back from records. The Dow is down 95, drop there of 0.2%. NASDAQ down 58, a decline of 0.3%. 10-year 4.39%, the 2-year 4.26%. Gold down $2 the ounce to $25.70, down 0.1%. West Texas Intermediate crude down 0.3%, 68.24 the ounce, and Bitcoin up 0.5%, 89,081 on Bitcoin. So again, repeating our earlier story, the Trump team plans to kill the $7,500 EV tax credit. That according to Reuters. Stay with Bloomberg for the latest on this developing story. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. And once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much, sir, with his eyes on the markets. Straight to your ears on the radio, on the satellite, and on YouTube, where you can find us right now. Search Bloomberg Business News Live with a lot to talk about. Everyone's waiting for the next round of names to drop. Don't worry, you haven't missed anything yet today. Treasury, Health and Human Services, those are the two big ones, right, we have left here after everyone still reels from the Matt Gaetz headline. A lot of questions on that, as we talked about with Mike Dorning. Is this sacrificial? Is it just a big Trump flex, torch the place, loyalty test for John Thune, all of the above? We're going to find out together with a series of confirmation hearings that will be doozies as we make our way into the new year. I'm Joe Matthew in Washington. Thanks for being with us on the fastest show in politics. Something remarkable happened last evening. Kari Lake conceded. Yeah, in the Senate race in Arizona. They called it for Ruben Gallego a couple of days ago. Kari Lake has still, correct me if I'm wrong, not conceded losing the governor's race in Arizona from 2 years ago. Right, James? Did she ever concede that? No. Senate race is behind us, though, which makes you wonder, maybe she's got something planned. It also makes you realize that we shut that down. We're done counting votes in the Senate. The House, still 9 races to call. Looks like Republicans will have a net gain of 1 seat. Pretty thin up there as we assemble our political panel. Jeannie Sheehan Zaino is with us, Democratic analyst, of course, Bloomberg Politics contributor and political science professor at Iona University. And look who's back. John Seaton is here, founder, CEO of Echo Canyon Consulting, Republican strategist. And I'll tell you right now, no stranger to politics in Arizona. John, Jeannie, great to have you both here. Mr. Seaton, I'm wondering your thoughts. Did you have to check twice to make sure that really happened last night? What does it tell you when Kari Lake concedes?
Well, Joe, good to be with you. I will tell you it was, I think the outcome had kind of been known for several days. I'm sure she and her team huddled, took a look to see what her options were. But at the end of the day, this was a little bit different from 2 years ago, which was a razor-thin margin that went to a recount. This time, it was several percentage points. There didn't really seem to be a pathway to victory. And if she does have aspirations to do anything else, it was probably time to acknowledge the reality that she did fall short and then move on from there.
Yeah. Could she run again for something in Arizona, John? What do you see next for her? Maybe she wants to get another show. She's a longtime broadcaster, could do a lot of things, I figure.
She could do a lot of things. She's a very talented communicator. I will say that, you lose once in a very close race. It makes sense to give it another go. A third time, I'm not so sure that's in the cards. I'm thinking the voters may be looking for another option, and they're looking for a Republican nominee for governor in 2026.
Ask Beto O'Rourke. All right, Jeannie, I should mention Pennsylvania. You know who else has not conceded is Bob Casey. We've got a recount in this race. By the way, David McCormick is in Washington for Senate orientation right now. And I realize this is within the margin that's required for a recount, Jeannie, but is this a good look for Bob Casey to pursue this?
Yeah, I mean, the state law has triggered the recount. But to your point, McCormick is about 26,000 votes ahead. The 4 times they've done an automatic recount, every time the person in the lead has come out ahead historically in Pennsylvania. So, there's very little reason to think that Casey could take this. I think, the writing is on the wall, but it is state law, so they do the recount. And I just have to bicker with the two of you a little bit. I listened to Carrie Lake. Was that a concession? She sort of just thanked her supporters and sort of just, it was a little less of a concession than I would say. But I guess when you're 77,000 down or whatever she is at this point, again, like Casey, the writing is on the wall.
Well, geez, if I push that too far, she came closer to conceding than in the past, John. Maybe that's a better way to put it. But I realize that Pennsylvania law kicks in here, Jeannie. The fact is, though, Bob Casey still has not conceded. Those are two different acts, are they not?
They absolutely are. And I think, when there's an automatic recount, it makes sense for him to hold off. But historically, you look at the 4, it's always been the person in the lead who has come out, and there's been no evidence of malfeasance or miscounting. So I think we let this go forward, and then we're going to see a concession. My understanding is on the 27th is when the state, around the 27th, we're required to get those numbers back. And I think most of us agree that McCormick is going to be the new senator from Pennsylvania, unless something very unexpected happens in this county recount.
Well, we got a couple special elections coming. Boy, Florida is the center of the political universe now, and I'm not talking about Mar-a-Lago. Well, I am talking about Mar-a-Lago, but add this. Ron DeSantis on the phone this morning with Mike Johnson. He needs 2 new members, John Seaton, because Donald Trump keeps taking Republicans from the House, and they don't have a wide majority here. Congressman Waltz, Congressman Gates, both tapped for positions in the new administration. And in the case of Matt Gaetz, we can get into all of this, he's already resigned his seat. So what should we expect here in terms of the balance in the House, John? Can both of these be filled in time for the new Congress?
Not in time for the new Congress, but I do think that it makes the majority more narrow, but Republicans will still have more members than Democrats, so they will have at least the ability to elect a speaker and get on with the business of governing. But yeah, I'm certain that Speaker Johnson would just as soon get those 3 now vacancies filled as soon as possible. The majority is already very, very narrow. Losing 3 votes off of that is going to make his job even more challenging.
Well, you're a campaign guy, John. What's this going to be like? Ron DeSantis is going to pick a couple of people, I suspect, who have a glide path to being elected. This is Florida. These stay Republican. What's the process going to look like?
So, look, I think special elections are their own kind of rare breed. And even we've seen time and again, including a couple of years ago when a Democrat won a special election in Alabama, of all places. Turnout is very, very low. Only the most kind of tuned in voters participate in these things. And so there's often going to be surprises. So while I think Republicans are heavily favored to hold all 3 of those open seats right now, I know that both parties will be paying a lot of attention. Democrats looking for an opportunity to maybe steal a seat, and Republicans making sure that they do what's necessary to hold on to them. So yeah, I would stay tuned there. I expect these to be at least somewhat interesting to watch.
All right, Jeannie, I don't think we haven't had a chance to talk about Matt Gaetz, right? Didn't that come out after that was between shows yesterday? I can't keep track of time. Here's my question, Jeannie. Actually, I've got a lot of them. We can do the whole sacrificial or not thing, but when it comes to actual electoral politics and Matt Gaetz's future, if he does not become the next attorney general, does he become the next senator from Florida, knowing that Marco Rubio is likely to become the next Secretary of State?
Boy, that's a good one. First of all, Joe, we are back on Donald Trump time. So everything is going warp speed. Can't keep track of what's happening. I have not talked to you since the Matt Gaetz shock announcement. I just felt so badly for poor John Thune and Kevin McCarthy. Gosh, it's going to be tough to be leading the House and the Senate for Johnson and Thune, and of course McCarthy. This, is just another blow to him. But to your point, Could Matt Gaetz be the next senator from Florida? I suppose anything is possible. I'm not going to hold my breath on that, but it is going to make for an exciting confirmation process if this goes through. The reality is it's easy to count Matt Gaetz out, but let's not forget, I believe he is the only person in American history to successfully bounce out a sitting Speaker of the House. And that is no easy task for somebody on the bench. So he has the political skills. But, if I am a MAGA person and I really want DOJ cleaned out, I'm not sure he has the skills to do that. But boy, does he have political skills. And I think we are going to see those on display as we go forward. So I wouldn't count him out going through this confirmation successfully.
Well, I'll tell you, if this gets to confirmation hearings, it's going to be wild. Cutting heads, as the Bulwark reported this morning. John Seaton, what's going through your mind here? Matt Gaetz has already resigned. He resigned his seat last night. So a lot of people are asking, was this just Donald Trump helping him get out of this ethics investigation in the House? Was this actually a sacrificial play to make another alternative style candidate appear more palatable, or to take our eyes off Tulsi Gabbard, some of the other names? How are you reading this move?
Yeah, I wouldn't necessarily look at it in terms of, four-dimensional chess. I think that Matt Gaetz is someone who Donald Trump has long admired, and he sees him as a fighter and sees him as someone who has also been, if you will, a victim of some unfair investigations. Whether or not that's right or wrong, I think that's the president-elect's kind of perception. And so I wouldn't look much deeper than that. I think that they see eye to eye on a lot of issues, and Donald Trump definitely likes to put people into office who share his vision and are kind of kindred spirits. And so I agree with my colleague. The confirmation hearing, if it gets to that point, is going to be quite a thing to watch. The other thing that I'm still trying to get clarity on is he resigned his seat in this Congress, but he was elected to that same seat for the next Congress. So he may just be back in his old seat if the Attorney General confirmation doesn't work out. We'll see.
This is why people hate Washington. Jeannie, the Ethics Committee, the timing here is absurd. The Ethics Committee was set to vote tomorrow on whether to release this report into Matt Gaetz. Now, there are some, including Dick Durbin, who at least for now chairs the Judiciary Committee in the Senate, and I know that's a different chamber. But they're demanding that this report be released. Every time I ask somebody about it, they say, whatever, they're going to leak it anyway. What do you think should be done?
Well, what should be done is technically it should probably not be released, but what will be done is exactly what you're talking about. We likely will see it released. And of course, when he goes through confirmation in the Senate, those senators have a right, particularly in the committee, to look at that material and to consider it carefully. It is fascinating because a big question is, did Donald Trump realize that this vote was taking place on Friday? There is a whole school of thought out there that says when Matt Gaetz got to him and said, hey, listen, I'm going to blow the DOJ up, and he was going to be Trump's retribution, if you will, that Trump didn't stop to think about what was happening with him in the House. And so then he gets the nomination and resigns. So who knows if Donald Trump himself didn't realize this was coming forward. But again, Donald Trump, this is the kind of style that he likes to use. And when everybody else he was apparently considering came in too buttoned up and Gaetz played the game of I'm going to blow the place up, he jumped at it.
Blowing the place up. How many times have you heard the phrase blowing the place up? We're torching the place. John Seaton, you know the Senate. You spent a good deal of time there. I ask you with a straight face in our remaining moment here. Could Matt Gaetz actually gain the votes to be confirmed?
He absolutely could. And I think that while there has been chatter, first of all, none of us know what's actually in that ethics report. And so it will be interesting to see when it does get out. I totally agree it will get out one way or the other. I think there's 53 Republican senators. There are 2 hard no votes in Collins and Murkowski. And now it's up to the president-elect's team and Matt Gaetz to keep at least 50 Republican senators on the reservation with J.D. Vance's vote, tie-breaking vote he gets in. So absolutely, he could get confirmed. It'll be a numbers game to see where things shake out.
We've got a great panel today. John Seat and Jeannie Shanzano, they stay with us in our second hour as we welcome our global television audience to the conversation. We'll also welcome Congressman Andy Barr, the Republican from Kentucky, is going to be with us to talk about the new majority in the House. Maybe thinner than the last majority. We'll see. It depends how many of these confirmations actually end up going through. Kaylee Lyons will join us. We'll have our panel with us. And we'll also have a lot more later on geopolitics. We haven't spent enough time talking about what this all means for Ukraine. Melinda Herring from the Atlantic Council will join. So stay with us right here on Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Washington waits for the next name to drop. Welcome to the fastest show in politics as Donald Trump keeps the Capitol on edge after his latest round of appointments, and we've got more to follow. Treasury and Health and Human Services. Thanks for joining us on the Thursday edition of Balance of Power here on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons in Washington. Kaylee, one thing we do know, while we still have some blanks to fill in, is that Republicans do control Capitol Hill starting in January. That goes for the House, a razor-thin majority made potentially thinner by Donald Trump, but they've managed to rewrite the rules. An important night last night that might get lost in the shuffle. It's about to get a lot more difficult to fire the speaker.
Remembering that we saw a speaker fired last fall because the rules were one member could bring forward a motion to vacate. That member, who ultimately succeeded in ousting then Speaker Kevin McCarthy, happens to be Congressman Matt Gaetz. Although he is no longer a congressman, he resigned from the House last night just after we learned that Donald Trump has selected him to serve as Attorney General, though there are massive ethics questions around Mr. Gaetz and serious questions, especially as to whether or not he can actually get confirmed by the Senate.
That's true, and questions about timing. The Ethics Committee in the House was set to vote tomorrow on whether to release the report into Matt Gaetz. Some say it'll be leaked, if not released, either way. But there are a lot of questions about the way this might work. He did resign his seat last night, but he was also elected to a seat in the next Congress. And there are questions about whether he shows up for the job in January anyway.
Yeah, so we're going to get more from Capitol Hill Live in just a moment here. Congressman Andy Barr, the Republican from Kentucky, in the running to lead the Financial Services Committee in the next Congress, will join us. But we begin, as always, with a check on the market. So Charlie Pellet up in New York, how we looking?
Well, right now we are looking lower across the board. Kaylee Lyons, lots of moving parts to this market, lots of developing stories, and yes, we got you covered here at Bloomberg. President-elect Donald Trump's transition team plans to kill the $7,500 consumer tax credit for EV purchases. That, according to Reuters, citing two sources. Right now, we've got Tesla shares down 3.7%, Rivian Automotive down 10.9%, but Ford, GM, they're both trading higher now. Ford shares up 0.2%, GM up by 0.5%. The other developing story at this hour, Federal Trade Commission preparing to launch an investigation into anti-competitive practices at Microsoft's cloud computing business. That, according to the Financial Times. Microsoft shares, they are trading lower right now. We do have Microsoft down by just about 0.5%. And it will cost $9 for most motorists driving into large parts of Manhattan beginning in January under a revised tolling plan that New York Governor Kathy Hochul is seeking to push through before President-elect Donald Trump, who opposes the new fee, takes office. Stocks lower, as I mentioned, with the S&P down 21, drop now of 0.4%. We've got the Dow down 141, down 0.3, and NASDAQ right now down 0.4%. 10-year 4.39%, with a 2-year that's yielding 4.25%. Gold down $1 the ounce, little change, 25.71. Crude down 0.2%, 68.29 a barrel. And Bitcoin today, Bitcoin up 0.7% right now, 89,263. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington, and once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at the trading on this Thursday. Thank you so much. Meanwhile, here in Washington, we're still absorbing all of the news we got on Wednesday, because boy, was there a lot of it, not just Donald Trump's trip to Washington, but leadership elections in the Senate and in the House, where they have renominated Mike Johnson to take another turn at the role of Speaker. Now that we know, which also was made official yesterday, the House will be maintained with Republican control. They have retaken the majority, or kept it going, rather, according to multiple networks and the Associated Press. So the assumed-to-be Speaker in the next Congress, Mike Johnson, was feeling pretty good yesterday.
The theme that you'll hear over and over from all of our members across the conference is that we are unified and energized and ready to go. Serious times call for serious leadership. It's going to be a policy agenda-driven administration and a Congress, and you've heard us say many times that it could be, I believe it will be, the most consequential Congress of the modern era, most consequential administration of the modern era, because frankly, we have to fix almost every area of public policy.
But of course, we need to finish this session of Congress, and we do have questions about the lame duck session and what it might bring. That's where we start our conversation with the gentleman from Kentucky, Congressman Andy Barr, Kentucky's 6th member of the Republican Conference. Great to have you back, sir, on Bloomberg TV and radio. Thank you for joining us. I want to begin with the funding deadline that is on December 20th. You and your colleagues need to figure out how to keep the lights on going into the new year, and there's an argument about whether that should last into March or in fact go further into September to buy Donald Trump time to enact his agenda, not saddle the new president with a funding debate as soon as he gets into office. Your colleague from New York, Mark Molinaro, professed his preference for going later into the year with a stopgap. But Congressman, I know that is problematic for members of the Freedom Caucus and for a lot of defense hawks. Where are you on this?
I think we need to clear the decks. We need to get the spending bill done. The House has passed 70% of all of the spending for this fiscal year, so we have about 30% to go. The Senate hasn't passed a single appropriations bill. But I think in the interest of the next administration, we should clear the decks. We have a lot to do, as the speaker pointed out in your earlier segment. We have a lot to accomplish in the first 100 days of the next administration. And if we're fighting old battles and the spending bill for this year, instead of looking forward to next year, I think that would really waste a lot of time. So yes, we need a fiscally responsible appropriations bill, but we need to get it done by the deadline of December 20th and give the next Congress a unified Republican government all of the flexibility that will be required to pursue a very ambitious and bold agenda in the first 100 to 200 days next year.
So, Congressman, I think what you're saying is that there shouldn't be another continuing resolution. And if so, aren't we just going to end up with either an omnibus or a couple minibuses before the new year?
Yeah, I don't think we should kick the can down the road. Let's finish the business. As I said before, the House has passed 70% of the appropriations bills. Let's finish our work and get the Senate to do its work, whether that's in one bill, two bills, three bills, three minibuses, or what have you. We just need to get the job done so that we start with a clean slate in 2025. There's so much to do in reconciliation with extending the tax cuts, securing the border, passing legislation to unleash our energy potential. And in the Financial Services Committee, we should have a big, bold agenda to restore the American dream by unleashing our capital markets to really provide jet fuel for our economy. That's what the American people deserve. Fighting the old battles of spending for this year, I think, would delay all of that work.
Says a lot, Congressman, when the regular order option seems to be the most alternative at the moment, but I appreciate your view on that. We're watching shares today of Tesla and Rivian and other companies exposed to electronic vehicles fall sharply. Tesla's down about 4% right now. Rivian is down over 10% with a Reuters headline that Donald Trump wants to undo or get rid of the $7,500 EV tax credit. This is something that we knew could be coming in an effort to unwind parts of the IRA. Congressman, does he have the votes in Congress to do that?
Well, he has my support because I don't think government intervention into markets is a really effective way to efficiently allocate capital in our economy. The fact of the matter is, if you talk to auto dealers across this country, certainly in Kentucky, the demand for EVs is simply not there. And clearly, through the Inflation Reduction Act, Congress was trying to put its finger on the scale and have the government incentivize the allocation of capital, incentivize the transition to electric vehicles when, frankly, market demand is not there. The most efficient way to allocate capital is, of course, through the free market. And this kind of industrial policy is not a good way to promote American competitiveness. Frankly, we are in a global competition with China and other countries, and we shouldn't try to counter China by becoming more like China by copying or imitating their industrial policies. We need to be the best version of ourselves, which means that we need to unleash our capital markets, and we need to be we need to embrace the market, and the market simply does not support a precipitous transition to electric vehicles. The American people just don't want it.
I want to talk about a different transition, Congressman, the transition of power between presidents we're experiencing now as Donald Trump has been outlining the selections for his cabinet. I know Capitol Hill was taken a bit by surprise yesterday when we learned that one of those was then Congressman Matt Gaetz from Florida. I wonder your reaction, sir, to not just the selection of Gaetz as Attorney General and whether you think he has the character for that job based on your experience working with him in the House, his sudden resignation, and the fact that this is now 3 House members that have been pulled for the administration, making a thin majority a bit more difficult to navigate.
Well, let me just say, I think Elise Stefanik is a fantastic choice for UN Ambassador. She's going to do a great job. The Senate will work its will with all of these, including Mr. Gaetz, and the Senate will, of course, have a say in whether or not these nominees will ultimately get their pick. But in terms of Mr. Gaetz's vacancy, what I'm most excited about is the fact that Governor DeSantis has said we will fill that seat before January 3rd. So we will have a new member of Congress, and we will be able to secure that very important thin majority that we have so that we have unified control of the House, the Senate, and the White House.
Should the House Ethics Committee, which is set to meet tomorrow,
3rd, by the way.
Understood. Should the Ethics Committee, Congressman, release the report that it has been working up about Matt Gaetz, either to vindicate him or otherwise inform the confirmation process? They're set to meet tomorrow on this.
Yeah, I think the Senate will demand that. I think the Senate will need that information in order to work its will in the advise and consent process. And so I think it is important that the Ethics Committee, I do not serve on the Ethics Committee, but I do think it's important for the Ethics Committee to wrap up that work so that the Senate can have all of the information in considering that nomination.
Well, sir, you may not serve on the Ethics Committee, but you do sit on the Financial Services Committee. You would, in fact, like to be its next chair. In that role, what would be agenda item number 1 in the new Congress? Is it banking? Is it crypto? Is it both?
It's all of it. We need an American Dream Act. We need to restore the American dream. The exit polls were very clear. Why did the American people vote for Donald Trump overwhelmingly, and even the popular vote? Why did the American people give Republicans control of Congress and total control of the government? Is because they're dissatisfied with the direction of the country. Over 2/3 of Americans believe that we're on the wrong track. So they want change, and they want the American dream restored. The idea that with hard work and by playing by the rules, they can get ahead. Right now, they don't feel like they're getting ahead, and they want major economic growth to give them that upward mobility that they deserve. In order to do that, of course, we need to extend the Tax Cuts and Jobs Act, those $4.5 trillion of expiring tax cuts through the reconciliation process. But we need more than that. We need to unleash our capital markets, and that means deregulation of our capital markets. It means deregulation of the banking sector. It means a regulatory framework for innovation in fintech and digital assets, providing clarity, certainty, and durability in the law to make sure that all of that innovation happens here in the United States. We need an affordable housing agenda to combat inflation. A major part of inflation is the lack of affordable housing in this country. And deregulation of our housing markets is a big piece of that. The Federal Reserve needs to continue to shrink its balance sheet so that we get to price stability. And with price stability, we can gradually lower those interest rates to make housing more affordable. In addition to that, I think we need a national security agenda in financial services. I think what you're going to see with the Trump administration and unified control of Congress by the Republicans is maximum pressure on our adversaries through the Department of Treasury and sanctions. The previous administration was chasing sanctions relief. When Donald Trump says he can end the war in Ukraine, what he means by that is crushing sanctions on Moscow instead of chasing sanctions relief, whether it's Tehran or whether it's Moscow. You will see a much tougher Treasury when it comes to our adversaries that will give us leverage to end some of these conflicts around the world and deter our enemies. So it's a multi-tiered strategy. It's strength through deterrence on the national security front. And then, because we're in a global economic competition, it's about making our financial system much more competitive through deregulation.
All right, Congressman, thank you so much for your time. That is Congressman Andy Barr, the Republican from Kentucky, in the running to chair the Financial Services Committee in the next Congress. Thank you so much. We want to quickly add the voices now of our political panel today. Jeannie Shanzano, Bloomberg Politics contributor and senior democracy fellow with the Center for the Study of the Presidency and Congress, together with John Seaton, founder and CEO of Echo Canyon Consulting and Republican strategist. John, just as the Republican, we just heard from the congressman there this notion that the Gates seat could be filled quickly before January. He's excited for Elise Stefanik, but how hard is it going to be with this thin majority to get all that work he wants to get done when the vote count is so narrow?
It's going to be a challenge for sure. I will say, for someone who was just on the back bench less than a year ago, or about a year ago, Speaker Johnson has done a very, very good job of corralling votes and getting to it was 218. Now I think it'll be about 216 votes that he needs to pass this legislation. So it will be a lot of work. There'll be a lot of, I think, deals that are going to have to be cut to get these things through. But I would not count out Speaker Johnson. He's done a very, very good job so far.
Well, pretty interesting to hear from the Congressman Genie about government funding. He says, don't kick the can. We need regular order. Let's pass all 12 spending bills. Would it not take a Christmas miracle for that to happen?
It would, but boy, that was a great conversation and music to my ears as we keep talking every year after year after year. Can we get something in place so that the government can be funded in a regular way, in an orderly way? And so to hear Congressman Barr say that, but to your point, I think it's easier obviously said than done. We know that from experience. And I also thought it was very interesting to hear him say about the confirmation process in terms of Matt Gaetz, that the Senate is going to be considering likely what is coming out of the Ethics Committee. And my understanding is they are at this very moment battling about what is released. But whether it's released publicly or not is almost beside the point. I agree with him completely that the senators have a right to get that information.
Well, I wonder about one senator in particular, John, the one who was all excited about a new job yesterday. Senator John Thune of South Dakota, just elected to be the next majority leader, and then he's handed the difficulty of navigating a Gaetz confirmation process. How do you think he'll do?
I think he'll do a great job. I think that John Thune is widely
What does that look
respected.
like?
What does that look like? I think he has the respect of his members, and I think this job, when it comes to leadership, it really is about having the trust and the support of your 52 other Republican members, and I think that they know that he'll have their back. They know that he's working for the betterment of the conference. So I think he'll do well. I do think that he's got some real challenging confirmation battles up ahead of him right now. I'm not sure how excited he is to have the job, but I think he'll do well. And I think that his colleagues really do respect him. And I think that will play a huge role in how the Senate runs over the next 2 years.
Certainly big shoes to fill and a big test now with President Trump emerging at the other end of Pennsylvania Avenue. Great conversation with our great panel today. John Seaton, thank you for joining. Of course, Echo Canyon Consulting Republican strategist, and Jeannie Shanzano, Bloomberg Politics contributor, Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress. Smart panels always here on Balance of Power, helping to frame this. And thanks as well to the congressman. We're going to do our best to bring you voices from this new Republican conference as we get into the funding debate for real ahead of the holidays.
Yeah, and of course, it's not just funding for the U.S. government, but funding for allies as well, like Ukraine, very much in question in this second Trump administration. We'll have Melinda Herring joining us of the Atlantic Council later on Balance of Power. So stick with us right here on Bloomberg TV and radio.
11:21 on Wall Street. We do check markets all day long here at Bloomberg. A lot of red on the screens on this Thursday with the Dow, the S&P, NASDAQ all declining. S&P down 15 now, down another 0.3% to 59.69, further retreating from records. The Dow down 136, down 0.3%, while the NASDAQ Composite Index is down 40 now, a decline of 0.2%. 10-year 4.40% with a 2-year 4.27%. We've got gold down 0.1%, 25.69 the ounce. West Texas Intermediate crude down 0.3%, 68.21 a barrel. Bitcoin now up by almost 1% at 89,466 on Bitcoin. President-elect Donald Trump's transition team plans to kill the $7,500 consumer tax credit for EV purchases. That according to Reuters, citing two sources. Tesla shares down now by 4.3%. Rivian now down by 11.8%. Ford shares swinging between gains and losses, down by about 0.1%. GM, though, up by about 0.8%. Meta Platforms has been hit with an $841 million fine by European Union regulators by tying its Facebook marketplace service to its sprawling social network. Meta Platforms shares down 0.6%. And New York City's congestion pricing plan with that $9 toll will start in January. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons in Washington alongside Joe Matthew, and it seems like what we're doing in Washington these days in the afternoon and evening is just watching True Social obsessively, waiting to see when the next name will drop as Donald Trump, the president-elect, slowly but surely starts filling out not just his cabinet and those who will need Senate confirmation, but others who will be close to him in his second administration as well, including those who will serve in the White House as special assistants to the president, deputy chiefs of staff, etc. We've had a lot of names so far, many of them surprising, perhaps none more than Matt Gaetz tapped as AG yesterday. But, Joe, we still have a long way to go, especially when it comes to the economically oriented selections
for sure.
that he needs to make.
Treasury being the big one. Who's going to chair the National Economic Council? Some of these other ideas in Health and Human Services. Will there be an RFK Jr. involved in any level here, even if it's a czar, as we've seen more than once? So, yeah, we've got some big blanks to fill here. And an opportunity to spend some time with Gregory Cordy, Bloomberg Politics reporter, who's a student of political history, and reminded us of 1989, right? Senator John Tower voted down in the Senate as a nominee, I believe, for defense secretary. That's right. Since then, we've seen a lot of withdrawing resignation letters, this types of thing to kind of cover the president. Do these appointments like Matt Gaetz actually get to the level of a vote if it looks like it will fail?
Yeah, I looked into the history of this yesterday after the Pete Hegseth nomination for defense, which raised a few eyebrows, and then the Matt Gaetz nomination for Attorney General, which raised a lot more eyebrows. And the history of this is pretty interesting because through the first 200 years of the Republic, it was extremely rare for the Senate not to give deference to the president's nominees for cabinet posts. After all, these are the president's advisors. This is the president should get to assemble his own team. He won the mandate of the people, and the Senate gave him deference. And then about the time of the Tower nominations when it started to change, except that Tower was voted down. It was clear that his nomination was faltering. He decided to push it to the very end. He was George H.W. Bush's nomination for defense secretary, had some problems that surfaced in his FBI background check, dealing with alcohol. His nomination was voted down. Ever since then, the way it works is that the Senate just sort of sits on the nomination indefinitely until the president gets the hint or the nominee gets the hint and withdraws their nomination. And that's happened 2 or 3 times in every presidency since then, with the exception of Biden, which is interesting.
Well, Julie Su is still
That's
only
true.
acting
Acting,
Secretary
exactly.
of Labor because she couldn't get confirmed. So I guess we'll see if we have any
He's got his own version,
actings.
yeah.
Yeah, well, and it
But you
raises...
have to get in. You have to be confirmed for something before you can be the acting cabinet secretary. And so Trump has a startup problem here. He needs to get people at least confirmed to something so that under the Vacancies Reform Act, they can serve in an acting capacity for something else. And so that's why he's pushing the idea of these recess appointments.
Yeah.
He's asking the Senate, hey, can you guys turn your backs for a little while I make these appointments? Go out of session, and under the Constitution, he's allowed to make these recess appointments that would be for at most 2 years, but that's enough to kind of get the ball rolling on his administration. It would be unprecedented for the Senate to agree to this, and I think going back to the subject of the Attorney General nominee, Matt Gaetz, that might be a harder sell today. Now with John Thune as the majority leader designate and the Gaetz nomination than it was 24 hours ago.
Okay, so we've got a couple more big ones to drop. Are you looking at Treasury and health the way we are? The short lists for Treasury don't seem to be too shocking when you consider the Bessents and the Lutnicks of the world. How about Health and Human Services? Do we hear about an RFK Jr., or is that not in the works?
I think what seems to be imagined is some sort of super cabinet role for RFK. Something in the White House. He may have trouble also getting nominated to a cabinet Senate confirmed post. But he has a problem, in that Trump is talking about all these czars, and he's talking about Elon Musk and Vivek Ramaswamy coming in. These very often are unpaid positions. So there's only so many paid jobs in the White House to go around.
Yeah,
so does Trump use one of those chits on Kennedy to make him an Uber Secretary of Health and Wellness and Food, or appoint him to a more traditional job? And I think that remains to be seen.
All right. Well, we know you'll be keeping us updated. Bloomberg's Gregory Cordy.
Thanks, Rudy.
Thank you so much. And of course, it's not just those of us in the newsroom or a guest here on Balance of Power who had to react to this. It's really been reaction around the world, including last night in Asia, where our very own Haslinda Amin had a chance to sit down with the former Speaker of the House, Kevin McCarthy, and began in part by asking him what he thinks of Trump's cabinet picks so far.
I think the choices are very good except one. Look, Gaetz won't get confirmed. Everybody knows that. But when you look at a Rubio, just the knowledge that he has, being in the Intel Committee, I was on the Gang of Eight, and his understanding, even when you listen to the other side of the aisle, they say, he'll make a great Secretary of State. So that's strong for me. A Waltz, just his background, from a Green Beret and others being the... But John Radcliffe at CIA, former DNI, that's very strong. And the difference is to what was 8 years ago today, President Trump understands the job. He knows the people that he needs around him to get there. And I think he's going to be much better prepared because he only has one term, but he'll hit the ground running this time.
You say Gaetz will not be confirmed. Why bother with the nomination then?
You can talk to President, but it's a good...
How are you reading
It's a good deflection from others, but it also gives... I'll let it stand with that.
No, I mean, just provide us some thinking into, what Trump had in mind when he made that nomination. Is it a case of, you win some, lose some? It is a negotiating tactic? What is it?
You'd have to ask President, but Gaetz couldn't win in a Republican conference, so it doesn't matter.
When you take a look at the nominations so far, I mean, we've seen, China hawks, for instance. Is that an indication of how he will approach the relationship between the U.S. and China?
Look, I think for those world leaders, they have a relationship with President Trump, and I think they're probably thankful that President Trump won. It brings greater stability around the world, but it also says a very clear message that America won't be pushed around. And also when it comes to economic issues like trade and others, this president wants to negotiate. This president wants to have a fair deal. And he can work with anybody, be it the leader of North Korea, and stop testing your missiles and let's sit down and talk. He's willing to sit down and talk to him. That's a different approach that I think is much more successful, and I think the world will approach that. Putin never invaded another country while President Trump was in office, and I think those things will stop as well.
The former Speaker of the House, Kevin McCarthy, on Bloomberg TV. and radio as we bring Jeannie Sheehan Zaino back into the conversation, Democratic analyst, Bloomberg Politics contributor, and political science professor at Iona University. Jeannie, you almost get the sense that Kevin McCarthy doesn't like Matt Gaetz, hearing him talk there. But he continues to loom over this Republican conference. Matt Gaetz is not a congressman any longer. Is Kevin McCarthy correct that he could not be confirmed even by his own party?
It's absolutely possible. Yes, you could just hear Kevin McCarthy. It was oozing out of him. And I have to say that, the fact is that this has made for a lot of good sort of theater in Washington, D.C., if that's what you want. But the reality is that Matt Gaetz is not have a record of policy making or any sort of serious ability that he's ever shown to lead an operation this big. And so this is where the rubber is going to meet the road for these Republicans. And I agree with John Fetterman when he says the fun is going to be watching the people on the GOP side in the Senate try to justify their votes for him. If they do that, I mean, it is going to be seeing them go into pretzel-like positions to do that.
Well, and the pretzel-like positions result or possibly by them wanting to stay loyal to Donald Trump and those he has said he wants to have in his cabinet, which raises the question I think a lot of us had in Washington in the last 24 hours, Jeannie, is whether we should be reading this as a loyalty test.
Yeah, I think it's partly a loyalty test. I think it is partly Donald Trump really wants a retribution against the DOJ that we all know he thinks seriously wronged him. And what we're hearing is in his interviews or discussions with people for the attorney general job, the only one who came out and, blurted out that burned the place up was Matt Gaetz. Everybody else was a little bit more respectable, a little bit more what you'd expect in an attorney general. This is what Donald Trump wants. And so this is what he's chosen. There's even some questions as to whether he realized about this ethics committee report vote on Friday. So I think, it can be a loyalty test, and it also can be Donald Trump's really through Matt Gaetz voicing how frustrated he has become with the DOJ over the last several years.
We can certainly imagine that. You do wonder, though, the idea of this being a negotiating tool or some sort of sacrificial play to take the attention off the Pete Hegseths and the Tulsi Gabbards, or maybe make the next candidate appear more palatable. Jeannie, what do you think of that? We're talking about Donald Trump here.
Yeah, it's absolutely possible. But the thing I always go back to is Donald Trump usually says exactly what he means. And so I never sort of believed on, this idea that Donald Trump is putting him out there so that everyone else who was questionable looks better. And he's sort of the Robert Bork of the Senate right now, the confirmation process. I don't believe that. I think this is really the type of person he wants there. The fact is that the people who said this makes, Hegseth look like Eisenhower, there is truth to that. But I think that's more of like, collateral positivity for Donald Trump and Hegseth. I think the reality is this is exactly the kind of person that he wants in a role like this. And the question is, if he gets through the nomination process, the confirmation process rather, what would he do in this kind of role? Because I would not underestimate the ability of a Matt Gaetz to push this through.
All right, Jeannie Sheehan Zaino, Bloomberg Politics contributor, thank you so much for sticking with us. And remarkable how the Gaetz news completely overshadowed the other news of a big cabinet position. Marco Rubio officially tapped to be Secretary of State. We talked about it for 5 minutes.
Maybe because it was out there in the mix already.
I
don't know.
that's
But
true.
if you're Marco Rubio, what am I? Chopped liver.
Okay, well, we'll focus on foreign policy next. Melinda Herring's coming up right here on Bloomberg.
11:40 on Wall Street. We do check markets all day long here on Bloomberg. We are looking at a further retreat for the U.S. stock market with the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 all in the red. Stocks losing steam today. We've got the S&P down 22 right now, a decline of 0.4%. So the S&P now at 59.63. The Dow is down 178 points, down 0.4%, and NASDAQ down 56, a decline of 0.3%. The Russell 2000 index of small cap shares leading the losses, down 1.1%. 10-year at 4.40%, with a 2-year today at 4.28%. Spot gold, little change, down 0.1%, 25.70 the ounce. Crude, West Texas Intermediate up 0.1%, 68.53 a barrel. And Bitcoin holding close to 90,000 right now, 89,000. It is up by about 0.5%. We're keeping an eye on automaker shares. They are lower after Reuters reported that President-elect Donald Trump plans to eliminate the $7,500 consumer tax credit for EV purchases. Shares of Rivian down by 12.3%. Tesla tumbling 4.7%. Another story we're keeping an eye on, Federal Trade Commission preparing to launch an investigation into anti-competitive practices at Microsoft's cloud computing business. That according to the FT, citing sources. Microsoft shares, they're up now by 0.2%. Recapping, stocks losing steam, S&P down 22, down 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Keeping eyes on Wall Street for us as we cover politics live from Washington. Thanks for being here on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lyons. It's the Thursday edition of Balance of Power with still many questions about the appointments that we're hearing and will still hear from Donald Trump as he fills out his cabinet. Much of the view, Kaylee, has been domestic, but there's a deliberate effort here at Bloomberg to keep our eyes on geopolitics with a lot of questions about what another Trump administration will mean specifically for Ukraine and the Middle East. Antony Blinken is back overseas, by the way, not to deal with the matter of Israel. He went to Europe, went to Brussels to talk to NATO about Ukraine as the administration tries to get the remaining money and material from the $61 billion relief package for Ukraine out the door, Kaylee, before the inaugural.
Well, yeah, as they're trying to perhaps Trump-proof this to the extent that they can, knowing that both the president-elect and the vice president-elect have expressed skepticism about continued U.S. support financially for Ukraine. And then there's, of course, the other people who could join this administration to consider here as well. We learned yesterday that Senator Marco Rubio of Florida will be tapped for Secretary of State. Former Congresswoman Tulsi Gabbard will be Director of National Intelligence. Yep. We've gotten a number of picks that raised many foreign policy questions. Hegseth. Of course, before that, Pete Hegseth, the Defense Secretary, and Elise Stefanik tapped for ambassador to the U.S.
Did you put together the mosaic here? If you're with us on Bloomberg TV or on YouTube, you can see it in real time. It does make you wonder what the administration's approach will be, Kaylee, remembering Donald Trump said he would end this war in Ukraine on day one.
So we want to get more on the ongoing war in Ukraine and how this administration could approach it, this incoming administration, and turn to Melinda Herring. She is non-resident senior fellow at the Atlantic Council. Welcome back to Balance of Power, Melinda. As we assess those who could help shape Donald Trump's foreign policy in this second administration, and specifically the language we have heard from them on Ukraine, what do you make of the picks so far? How do you think Ukraine feels about them?
Hey, Kaylee. So we don't know a lot at this point. Ukrainians were relieved at the choice of Secretary of State and also at the National Security Advisor. Both Rubio and the congressman are internationalists. And the congressman in particular, the future National Security Advisor, Mr. Waltz, has a strong record on Ukraine. His votes have been good for his record. He's met with Ukrainian soldiers. He gets it. So I think Ukraine felt a huge sense of relief at those two appointments.
What does Pete Hegseth specifically bring to the effort, knowing that he's looking to house clean at the Pentagon? We can attack this from a couple of different ways here, Melinda. Foggy Bottom is one, the State Department. The other, though, is the Pentagon itself and the promise to fire scores of generals. What would that mean for intelligence sharing, for strategic gathering when it comes to Ukraine?
Hey, Joe, I think the Pentagon nomination is one that gives people a lot of pause right now. It's not very clear what this gentleman would bring to the table in terms of his managerial chops. When you zoom in and look at Ukraine, the Pentagon has been critical in making sure that all of the weapons that Congress has appropriated get there on time. And this gentleman seems to be occupied with a lot of domestic concerns. So I think the foreign policy crowd in Washington is very skeptical of this nominee.
Okay, so if we're looking at potential areas in which there is concern over those who will be in the incoming Trump administration in the U.S., Melinda, is there going to be the ability to make up for that in other allies around the world? Is Europe going to be able to step in where the U.S. might not, or is there really no hope for Ukraine if U.S. military and financial backing does not continue?
There's always hope, and there's always hope for Ukraine because Ukrainians are determined, and this is an existential fight. So even though some of the current nominees raise more than an eyebrow, give me anxiety at night, pick whatever analogy you like, they are not confirmed. They may not make it through the confirmation process. And the attitude in Kiev is a lot chiller than it is here in Washington. Their attitude is, we can work with anyone. We will find the right argument and we will make the case because Ukraine must have assistance. And Europe is stepping up. Europe has been freaking out for the last week. And they realize that they haven't put their defensive lines in place. They haven't stepped up manufacturing to the extent that they need to. And I think they're finally freaking out, and that's a good thing. That's a good thing for European security. It's a good thing for U.S. taxpayers as well.
Talk to us, Melinda, about what is being prepared for shipment, whether it's money or material, military gear. What does the administration have left that it is so determined to send over before January?
Yeah, Joe, this is the really important question. So Jake Sullivan, the current national security advisor, has said that the $5.5 billion remaining on the books will be in Kiev by January 20th. It will be Trump-proofed. Now, I've been making some phone calls and talking to people on Capitol Hill, and that's not what I'm hearing and seeing. According to some of the conversations I've had, Joe, only 20 to 25% of that kit that the Ukrainians really need, and it's very hard now, will arrive by January 20th. So apparently the White House decided to put this military equipment to ship it by sea rather than to fly it in. So this is a big problem, and I hope the White House can speed it up because Ukrainians are depending on it.
Well, let's talk about something else Ukraine is dependent on, because wars are not just fought with actual ammunition and weapon. They're fought with information and the ability to communicate. And I wonder, Melinda, what your reaction is to the role we are seeing Elon Musk now play in his closeness to the president-elect, the role he will serve, we understand, as the co-head of the Department of Government Efficiency, knowing that he has the power to influence the operations of Starlink, and according to reporting, has even discussed that matter with Vladimir Putin.
Right. So this is a relationship that I'm going to continue to watch. We don't know how it's going to evolve, but the fact that Musk is involved in the conversations over Russia and Ukraine means that it's important and that it will be an elevated issue in the early days in the Trump administration. So unfortunately, I don't think we can speculate much more beyond that. It's something I'm watching.
Melinda, if Donald Trump's idea of ending this war on day one includes a settlement that gives Russia all of the occupied territory that it's taken, from the Donbass all the way down through Crimea, does he have a willing partner in President Zelensky, or is that a deal breaker?
So I don't know. So right now, Zelensky is saying no territory, but the conversation in Kiev has switched from territory, Joe, to security guarantees. And I think that's the area where the Ukrainians are not going to give whatsoever. They've said, even if we freeze the conflict now, even if there's some kind of DMZ zone, we know that the Russians will come back at us, and we can't live in peace. This is not a just peace. And it's interesting that Donald Trump has used the phrase just peace. It's also interesting. So Trump made a lot of promises. There's a lot of campaign rhetoric. He said that he will end the war in 24 hours. I'm sorry, that's not possible, but it's instructive to go back and look at his record. So when he pulled out of the Iran deal, it took them 16 months to do it. So I think Donald Trump is likely to find out that he makes these big, bold promises, but the actual implementation is quite sticky. And he's not not going to want to put himself, especially in the early days in his administration, in a weak footing. If he were to freeze aid on January 20th, there's going to be egg all over the United States face, and the Chinese are watching us and what we're doing in Ukraine. I don't think Donald Trump can afford that, and I think he is probably going to pivot back to a Reagan-esque theme of peace through strength.
As we consider what's actually happening in Ukraine now, Melinda, obviously there has been, in the last several weeks, a lot of focus on the fact that North Koreans are now involved in this conflict. What actually has that done to change conditions on the ground and the actual operations and abilities of Russia and the way in which Ukraine has to respond?
Kaylee, it's making the infusion of these 10,000 North Korean troops up in Kursk Oblast is making it more difficult for the Ukrainians. The Ukrainians are short on men and shells right now, and the pressure is really on. Is it decisive? No, but it increases the pressure, and it's also winter, and the winter season is going to be hard, cold, and brutal, and I expect pretty severe blackouts if the Russians continue their missile strikes, which they have been over the past week.
You know, we're assuming as a premise of this conversation, Melinda, and maybe rightfully so, I guess that's my question, should we assume that this new Congress, with Republican control of both the House and Senate, would not approve any further funding for Ukraine?
Joe, I'm not willing to concede that yet. So there was a lot of hope for a supplemental bill, but it doesn't look like that's going to happen in this lame duck period. But look, you and I have had lots of conversations about Speaker Mike Johnson. He cares about Ukraine. He cares about the Christians that are being persecuted by Russia there. He has personal relationships with a lot of Ukrainians, and he knows what's at stake. And a majority of Republicans still support Ukraine. So I'm definitely not giving up on Congress. There's bipartisan support for Ukraine on Capitol Hill, even in Trump's second term in office.
Well, I guess we'll see if that bipartisan nature is enough to get things over the finish line in this upcoming Congress when there's a lot domestically that they want to get done. Melinda, President Biden is about to make another trip overseas, one of his last as president. He's going to be meeting with Xi Jinping tomorrow on the sidelines of the APEC summit in Peru. He'll then be heading to the G20 in Brazil. How do you think Ukraine is going to factor into the conversations that will be had over the course of the next several days?
So I know that Taiwan and many other allies in the Pacific are watching to see if America will live up to its promise. We've made a lot of promises on Ukraine, and our actions have a big and resounding impact, particularly in Asia. So I think that our actions are being watched very carefully, and that's sort of what I expect to see and be a focus of that discussion.
Melinda, it's great to have you back with us, non-resident senior fellow at the Atlantic Council, with clearly a lot of questions that have to be answered about the way the Trump administration, incoming and the incoming Republican majority in the House and Senate, will handle the matter of Ukraine. Melinda, thank you, as always, for the insights. And we hope to continue the conversation as we learn more here, Kaylee. It really reminds us of how many plates we have in the air. As we talk about domestic policy, today it's the IRA and tax credits for EVs making news. But the situation in Ukraine, the situation in the Middle East, where there's now apparently a drive for a ceasefire that might coincide with the inaugural, with Hezbollah specifically, really worth watching as we see this transition take place.
Well, and of course, one of the visual elements of that transition that we saw yesterday was a sit-down between President Biden and President-elect Trump at the White House. And according to Jake Sullivan, who took part in the White House briefing yesterday afternoon, foreign policy did feature heavily on that agenda for that conversation, though we didn't get a full readout. We certainly do expect both the current leader and the one who will be leading the country moving forward after January 20th did talk about these topics in the middle of all of the other news Donald Trump was bringing us in regard to the composition of his second administration.
The next big meeting to look for will be in person. President Zelensky and Donald Trump, they are working on putting that together, according to Bloomberg reporting, and that could be happening anytime between now and the inauguration. We'll see if Elon Musk emerges in that meeting. But we've got a lot more to follow. To Kaylee's point, we've been getting a lot of these appointments in the second half of the day. Treasury still outstanding. Health and Human Services still outstanding, along with a couple of others. We'll put it all together for you in the late edition of Balance of Power at 5 p.m. Washington time.
Yeah, commerce, energy, agriculture. There is a big cabinet to fill out of just ones that need Senate confirmation and more still that we could learn about who won't require that check. So come back at 5 p.m. for more coverage in the late edition of Balance of Power. Myself, Kaylee Lyons, and Joe Matthew right here on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Thursday, November 14th. And gotta say, Tim, it looks like stocks, I don't know, take your pick. Taking a breather, getting tired, losing steam, and maybe this makes sense considering the run-up that we've seen in stocks since the election.
Look, I'll say yes, 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 and yes.
Well
All
done.
of the above certainly makes sense. We're seeing the Dow down 0.5 percentage point, the S&P 500 down 0.5 percentage point, still shy of that 6,000 mark on the S&P 500.
Yeah, and if you take a look at it, I mean, the S&P 500 kind of still hovering near those technically overbought levels. So we kind of get it. We kind of get it. This S&P up 25% so far this year, up 3% since the election. So, all right, we're going to table that for a moment because our focus on this Thursday, Tim, all about Fed Chair Jay Powell.
Yeah, we're gonna hear from him in a little over an hour. Also, we got another read today on inflation. He's getting ready to give a speech. We are, of course, going to be carrying that for you live. He's out there in Dallas. We expect him to start speaking at about 3 p.m. Wall Street time.
Not just a speech, it's Q&A, so it'll be interesting to see like what that first question might be. All right, plus we're going to get into the Trump team. Donald Trump continuing to pick those who will help him carry out his mandate. We're going to talk about that because there seems to be a common thread.
Also, the magic is back, but not in all parts of the kingdom. Even so, Disney shares just soaring today. Carol, hope that's one of your gainers.
Yeah, nice tease ahead. Deep tease, deep
All right,
tease.
good.
Hey, listen, folks, and we've also got the bargain hunters that are circling Chicago mansions abandoned by the rich. It is not just we poor folk who lose money on homes. Apparently billionaires do as well.
Michael Jordan finally sold that home.
Yeah.
It's been on the market forever.
At a loss?
At a loss, yes.
At a loss.
Yeah.
All right, we're going to
He'll be okay.
He'll be okay. All right, folks, we're going to get into that, all of it, in the next 60 minutes. First up, though, let's get a check on the trade and your top business stories. Here is the one and only Charlie Pell.
Thank you very much indeed. We got lots going on this Thursday. Stocks, though, losing traction right now following that furious post-election rally. S&P right now trading lower, down 25.5960, a drop right now of 0.4%. Dow Industrials down 174, decline of 0.4%. NASDAQ also down by 0.4%. Russell 2000 index of small cap shares, though, particularly hard hit today, down 1.1%. Your 10-year 4.41%, with the 2-year 4.29%. Gold down 0.1%, 25.70 the ounce. West Texas Intermediate crude oil up 0.3%. WTI 68.66 now on WTI. Bitcoin up 0.8% at 89,371. President-elect Donald Trump's transition team plans to kill the $7,500 consumer tax credit for EV purchases. That, according to Reuters, citing two sources. Today, we're looking at Tesla shares down 5.1%, and also moving lower, Rivian Automotive, it is down by 12.3%. So again, recapping, the Dow, the S&P, NASDAQ, all trading lower, with the S&P right now down 24, a decline of 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, got it. Charlie Pellet, thank you so much. Hey, listen, folks, in less than 60 minutes, Fed Chair Jay Powell, he will take to a stage in Dallas, give up a speech on the U.S. economic outlook. He's going to take some questions. His comments coming, of course, just 1 week after the last Fed meeting and Fed move, and a little more than 1 week ago from the U.S. election. So there's, needless to say, a lot that's been going on.
Yeah, setting it all up for us is Bloomberg News International Economics and Policy Correspondent Michael McKee, who joins us from our Boston bureau. Mike, you're up there in Boston because you're getting ready to talk to President of the Boston Fed, Susan Collins. It's happening tomorrow. We're going to get to that in just a minute. Today, though, the data points that we got on inflation, also what we got on the U.S. labor market, what do we need to know?
Well, basically, the labor market hasn't changed at all. 217,000 initial jobless claims. A lot of the claims that were filed after the hurricane's gone out of the data. So it appears that if we get any kind of snapback from the October numbers, we'll see a stronger job performance than we did in the prior month. The inflation numbers are more worrying in the sense that the PPI today sort of confirmed what we saw with CPI, that inflation has sort of stalled above the Fed's 2% target, with the core rate at 3.5% going up. The headline rate went up as well to 2.4%. So inflation's still an issue, and this leaves open the question of, does the Fed pause in December? A lot of data between now and then, but we also have Jay Powell's speech this afternoon, and maybe he'll give us some of his thoughts on inflation.
All right, you're teeing us up for the Fed chair. So tell us about, is he on a mission here in terms of a narrative? We've heard from a lot of Fed speakers since that that Fed decision, Mike, what's the game here for Fed Chair Jay Powell?
I would suggest that basically he's going to do what they did and say the Fed is committed to bringing interest rates down to a more normal level without saying what that level is, while at the same time saying there's no preset path or preset condition for doing so. They want to leave themselves maximum flexibility. They have more inflation reports, another labor report before the next meeting. And of course, going forward into 2025, we have all of Donald Trump's economic policies, whatever they may be, whatever effect they may have on the economy. So I would suspect we'll get much the same as we have heard from other members of the Fed and that we heard from Powell last week, that the economy is doing pretty well. The labor market and inflation are kind of in balance, and they can probably cut rates going forward, but they're not guaranteeing any particular cut at any particular time.
Hey, I want to bring in some breaking news here. We're seeing a post on Truth Social from the President-elect Donald Trump, who writes that, I respect Jamie Dimon of J.P. Morgan Chase greatly, but he will not be invited to be a part of the Trump administration. I thank Jamie for his outstanding service to our country. There's an exclamation point at the end of that one, Carol. So
short and sweet.
Short and sweet. Maybe puts to rest some of the, I would not say recent chatter.
No, and
I would not say recent chatter.
I'd almost like to say that there was more speculation about Jamie Dimon being a part of a Harris administration than potentially a Trump administration. Although we should point out the first go-round with Donald Trump that Jamie Dimon was part of those business councils that were up there at the White House, kind of initially on advising Donald Trump in his first term. So interesting to get some clarification on that. You know, Mike, it is interesting as we continue to hear who might be a part of Donald Trump's cabinet, his team, his Treasury Secretary. He's, you know, we're assuming Jay Powell will stay in his position. But I don't know. How are you thinking about some of these nominees that might be important, certainly to the U.S. economy and potentially, I don't know, not supposed to impact the Fed, but I do wonder how you kind of tie it all together.
Well, the president-elect has basically put his national security team in place. We're waiting now for the economic team. There had been talk of Jamie Dimon serving somebody as Treasury Secretary. Dimon had kind of made it clear before the election that while he wasn't endorsing anyone, he would be open to working for a Harris administration. And Jamie Dimon's wife actually worked on the campaign for Kamala Harris. So it's a little bit like that tweet is a little bit like saying, you can't quit me, I'm fired. He wasn't going to go to work for him anyway. So
you can't play with me, but you weren't invited anyway, right?
It is important to see who we get as Treasury Secretary. The leading names, Scott Bessent and Howard Lutnick. Either one has a lot of street credibility. When I say street, I mean Wall Street. And so they would come into office perhaps with a little more luster than most of the president-elect's other names, other than, say, Marco Rubio, who has been nominated for Secretary of State.
Hey, listen, Lutnick and Dimon are calling. They've got some street cred as well. I mean, the regular street, too, as well. I'm just telling you. Hey, listen, Jay Powell's going to make some comments. He's going to give a speech, but he's also going to take Q&A. If you were asking Jay Powell a question at this event, what would be the #1 question you would ask him?
Well, I think I would go straight to the idea of do they pause in December or do they pause in January? December because maybe the economy is not developing quite as they would like. Inflation seems a little stuck. Do they want to keep the pressure on inflation? And then in January, they're meeting, I think it's 9 days after the president's inauguration. So do they want to wait and see what they get from Donald Trump, who has promised to move very quickly? And if he's going to institute some executive orders on day one that would affect the economy, then maybe they want to pause and model those and see what's going to happen. So I think I would question the timing more than anything else at this point.
Okay, that would be your question for Powell today. Without giving away everything, you're going to talk to Boston Fed President and CEO Susan Collins tomorrow. Give us an idea of how you are thinking about the conversation, especially in the wake of the data that we've gotten, what we heard from Jay Powell last week, and of course the election.
Well, you know, Powell talked about at his news conference how we'd seen the labor market data impacted by the hurricanes and that we might see other data impacted by the hurricanes. So we want to look at beyond the data what these Fed bank presidents are hearing from companies and consumers in their districts. I asked Jay Powell, what CEOs were telling him. He said, I don't talk to a lot of them. So it's the Fed Bank presidents who will give us the information. Are they still planning on hiring, or are they starting to get together some plans to let people go if the economy starts to slow down? What do they think about prices going forward? Those are key questions, and these are the people who are the sort of the tip of the spear for the Fed in finding those things out.
Sounds like Jay Powell reads the Beige Book as well, so to get all that insight. All right, Michael McKee, we are certainly going to be looking forward to your speech there with Susan Collins, and of course, we're going to be looking forward to Jay Powell. Bloomberg News international economics and policy correspondent Michael McKee there in our Boston bureau. Remember, we will be carrying live Federal Reserve Chair Jay Powell's comments on the economic outlook from the Regional Chamber, Dallas Fed, and World Affairs Council of the DFW. That will be at 3 p.m. Wall Street time, and again, we will carry it
What
live.
would you ask him?
What would I ask
Yeah.
him? Oh, a new rate, a new normal rate in terms of inflation, because I think it's trending higher. And are they not going to kind of give in on that until it's just so obvious?
You didn't.
What would you ask?
I would go straight to politics. I know he wouldn't answer it, but I'm just trying to get some sort of clarity, some sort of color of the way he's thinking about these next 2 years.
Yeah, well, good luck with that, buddy.
Yeah, thank you.
All
I
right.
appreciate that.
All
Year and a
right.
half, next year and a half.
You know who is thinking about the next year and a half or the next 4 years is Meta. We want to get to the possibility of Meta being in the crosshairs of Donald Trump's second term.
Yeah, because in case you didn't notice, it's been a tough week for Meta Platforms since the election. So writes our own Kurt Wagner. So off to Denver we go, into Bloomberg News technology reporter Kurt Wagner, who's there standing by. He's also the author of Battle for the Bird, Jack Dorsey, Elon Musk, and the $44 billion fight for Twitter's soul. So, Kurt, about 1 week since the election, remind everybody where Mark Zuckerberg sort of sits in terms of the Elon Musk universe and the Donald Trump universe.
Yeah. Well, Elon, I would say, is one of his biggest nemeses. He's someone who, has sparred with him, not literally, unfortunately, for all of us. You may remember that there was supposed to be some type of
cage match, right?
The cage match never happened.
That's right. The cage match never happened, but it hasn't stopped those two from kind of trading insults, trading criticisms over time. But with Donald Trump, it's a little bit more complicated, right? Because Meta did, ban the president for 2 years after January 6th. He was brought back onto the platform, but earlier this year, he called Facebook the enemy of the people. He said one of the reasons he doesn't think TikTok should be banned is because it would help Meta, it would help Facebook, and he doesn't want to help them, right? Now, more recently, it's gotten a little bit nicer. Mark Zuckerberg has certainly attempted to do his part for that relationship. He congratulated Trump after the election victory. He called his actions after the assassination attempt badass. You may remember he said that actually with our own Emily Chang in that interview. And Trump has said he's not nearly as upset at Mark Zuckerberg as he used to be because he thinks that Meta is less involved in elections, right? So it's a complicated relationship. I point out all of that detail simply to say that, we're heading into a bit of an unknown, right? Historically, these two over the last couple of years have had a lot of tension. They seem to be making a little peace, but as we know with Donald Trump, things can change very quickly.
All right, but get into the specifics. I mean, TikTok may not go away. It looks like Donald Trump backing off that. That's more competition for Meta, and it's also its X-clone threat. I mean, there's a couple of components here.
There are. So I think the biggest one is this TikTok element, right? So there's a lot of speculation now that maybe TikTok won't be banned, or at least it would be a lot harder to ban TikTok with Trump in the White House. He has been on the record publicly saying he doesn't think there should be a ban. And as a result, people are saying, well, maybe he'll try and step in and stop this thing. Well, the biggest loser in that situation is Meta, right? Because Meta stands to benefit the most if TikTok goes away. They have a TikTok clone called Reels that they do short form video on. They would, probably immediately get millions, if not tens or hundreds of millions of new people just coming over to watch Reels instead of TikTok if it wasn't around. And it seems less likely that's the case. So there's one. The other, as you mentioned, is that, for a long time, the past year or so, Threads, which is Meta's kind of X clone, has been really alone as the real competitor to Elon Musk's X. Well, Blue Sky is having a moment, as you both may know, and it suddenly feels like that service has been revived too. So a lot more competition for Meta and its products today than I think there was, a week and a half ago at election time.
Okay, so that's on the one hand. On the other hand, Meta's made some moves recently that have been pretty good, you write, about the recent glasses that came out that people are actually really seeming to enjoy.
Yeah, so there are a few things. A few years ago, I'm sure you both recall, Meta came out and talked about the metaverse, right? And it was this big kind of flat landing. People were not excited. People were saying, why are you spending money on this? Like, why is the company pivoting towards this? There was a slow kind of recognition that perhaps Mark Zuckerberg may have been premature to that effort. Well, the more recent stuff that they've been doing is been talking about AI and talking about, these new augmented reality glasses called Orion, which we saw for the very first time in September. And these have been more of a hit, at least, initially, than I think the metaverse ever was. It's been more of a hit than I think maybe people even expected for a hardware device coming out of Meta. And so on the one hand, they're dealing with all of these issues around competition. On the other hand, they're kind of, they delivered something, or excuse me, it's not available yet, but they've unveiled something that I think a lot of people see a lot of potential in with these augmented reality glasses. And so I think that has given them a little bit more of a shot than perhaps I would have expected a few months ago.
I just want to, you said something there that's so important. They're not actually available for sale. These are just prototypes, but the people who've actually gotten their hands on them, Kurt, they really like them. We have no idea how much these things would cost if they ever do even end up in the wild.
Yeah, that's exactly right. I've actually, I got a demo of them in September. I thought that they were very cool. They're certainly not ready for mass consumption yet. They're still too thick. They're not really stylish enough for people to wear around without looking, kind of dweeby. But I think there is a path here that people see. I think I saw one analyst note when it came out that was like, is this Meta's iPhone moment, right? Like, is this the device for them? Now, that's a huge, to be clear, that's a huge claim. We have no idea. But the fact that that's even being floated as a possibility is a great sign for someone like Meta, who's, as you know, never really delivered like a mass mainstream hardware device before.
Hey, just a few other things I want to throw at you at the bad week that was. Some of it certainly Trump related. There's an FTC antitrust lawsuit. I also feel like, there's the story today that the company's paying, what, $841 million being fined by EU regulators over classified ads dominance. There's overseas regulatory issues, not necessarily a Trump issue, but other things that are going on.
Yeah, it's a bit ironic, right? Before, earlier in this conversation, I was talking about how they're suddenly getting more competition, perhaps from Blue Sky or TikTok sticking around. In the same week, in the same breath, they had two huge antitrust sort of losses this week. The one is that the FTC's antitrust lawsuit against Meta and progress. It will go to trial. Obviously, we don't know what's going to happen at trial, but just the fact that it's still moving its way through the court system is not what Meta wants. It's not what Meta was petitioning for. So that is advancing. In the EU, they're similarly faced, you mentioned this $840 million fine for antitrust-related reasons. The claim is that their marketplace product, it's basically their Craigslist competitor, is attached to their social network. And so the EU regulators are saying, hey, this shouldn't have been connected. It should have been its own thing. That's an antitrust violation. They got hit with this big fine as well. So a lot of competition and yet still getting dinged for being anti-competitive.
Hey, just quickly, 30 seconds left here. Hey, listen, if this doesn't work out, this Meta Platforms thing doesn't work out for Zuckerberg, he can always kind of lean on a singing career, right?
Oh man, I can't believe you're gonna subject all of our listeners here to bringing this up. Yes, Mark Zuckerberg has a new single. I won't go much further than that. I know. If you go listen to it, please let us know what you think about it. It is something to behold. Let me tell you.
All right.
You get to the
Don't
point,
leave us yet, though. You can listen to it later on.
You get to the point when you're Mark Zuckerberg, you got so much money. You
do cage
commission a statue of your wife, give it to her for a gift. You do, a song with T-Pain. It's fine.
Spouses and partners. That's a tough thing to beat. All right, coming up next, the top qualifications for getting a job.
2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all losing traction today, with the S&P 500 index down 24 right now, a drop of 0.4%. Dow Industrials down 142, down 0.3%. NASDAQ is retreating 84, down 0.4%, while the Russell 2000 index of small cap shares down now by 1%. The 10-year 4.41%, the 2-year 4.28%. Spot gold up 0.1%. Little change there, $25.74 the ounce. West Texas Intermediate crude oil up 0.5%, $68.74 a barrel. And Bitcoin now up by 1%, 89,560 on Bitcoin. President-elect Donald Trump's transition team plans to kill the $7,500 consumer tax credit for EV purchases, that according to Reuters, citing two sources. Shares of Tesla down 5.5% right now, and Rivian Automotive down by 11.9%. Capri Holdings and Tapestry have scrapped their $8.5 billion plan to merge after a court order froze the proposed combination of the U.S. fashion companies due to antitrust regulators' objections. Tapestry up 12.7%, Capri up by 6.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So I teased before the break how to get a job, and what I really meant was how to get a job in the Trump administration.
Okay.
So, could talk about a tease.
Yeah, that's harder than just getting a job.
Well, it seems like there's a common thread. President-elect Donald Trump has been definitely fast and furious in filling out his list of nominees for top cabinet and administration posts. As he names names, one qualification continues to jump out, and that is loyalty.
With more, let's get to Bloomberg News senior reporter covering U.S. foreign policy, Ian Marlowe. Ian joins us from our Washington, D.C. bureau. Ian, the naming process for members of his cabinet for his administration, too, they've poured out rapidly. Give us an idea of the one trait that at this point is clear, it's evident, one actually needs in order to serve in the next Trump administration.
Yeah, we kind of saw this last time with the parade of people who came through, obstructed him, got in fights, and then were fired and wrote kind of tell-all books about their White House experience. This time around, it is loyalty first. And these appointees, some of them nominations, some of them were floated. These people have a wide range of ideological views, some quite interesting picks, some of which have surprised, the foreign policy and national security establishment here in D.C. But the one thing that they all do have in common is fighting for Trump, doing it on TV, doing it well, and if they ever had a disagreement with him, they've made their peace and kind of come around, basically. So that's the one thing that's sort of uniting all of these picks, and which has led us to some kind of very peculiar ones. In particular, his defense secretary, who the headlines around here were, who is this guy? Pete Hegseth, for example.
Well, obviously they're not weekend viewers of Fox and Friends, or else they'd know who he was.
Wait, so before we get into that, though, Ian, I want to take a step back, devil's advocate a little bit. Many would say, hey, listen, every administration has loyalists and people who have been on the campaign trail and stumped, for the candidate, now then president. So, I mean, there's a fair amount of that, but you're saying this is just on a whole other level?
Yeah, I think it's just this time around, I think there's a lot of people who, he's broken with people over the past couple of years, in particular over January 6th. There were the Never Trumpers and others. I think this time around, he's really reached into Congress in particular, with Matt Gaetz, his nomination for Attorney General, Mike Waltz, his pick for National Security Advisor, people who he views as just effective effective people for his ideas and his agenda. It's been difficult as a Republican in Congress and elsewhere to oppose Trump's agenda. He can kind of give the kiss of life or kiss of death for your campaign or election prospects in some of these cases. But people made this point to me over the past few months. A president has the right to pick who he wants to choose, and I think a lot of people last time around stood in his way when he tried to implement some of these ideas that he had. You know, a lot of Democrats find these views, you know, and these policies, you know, offensive, but, you know, whether it's deporting lots of people or, you know, pursuing other policies in the Mideast and elsewhere. But these are, it's his prerogative as president, and a lot of people around this town, especially with the mandate that he got this time around, think it's, you know, his due right. So no one's kind of standing in his way. I think there's just a bit of surprise at who these, some of these picks are, you know, and some of them not all coming in with a long sort of backlog of experience in some of the departments they're being named to head.
And you have to wonder if that's going to come to head at all in the Senate in the confirmation process, which we're going to get to in just a second. But as you're speaking, I'm reminded of some of the folks in the first administration who did at first appear incredibly loyal, but then did see stuff that they didn't approve of and chose not to endorse the president-elect the second time, or the third time he ran, I should say. Somebody like Mike Pence, for example, who spent 4 years being a loyal vice president, but ultimately, post-January 6th, did not support the president-elect. And I wonder if there will be situations like that once again, not necessarily a direct corollary to what happened to Mike Pence, but people who start out loyal and then might have a change of heart, or if these folks are different.
Yeah, I mean, that's very true. And you know, Trump likes to keep people on their toes. And so to some degree, having that sort of, you know, friction, I think is going to be inevitable. There's going to be disagreements. There's going to be some infighting. There's going to be, you know, leaks and positioning. You know, one thing people did point out to me was that, you know, he came out, you know, as part of this process, publicly kind of said, you know, I'm not going to choose Mike Pompeo. I'm not going to choose Nikki Haley, people who had crossed him, you know, over the course of the last couple of years. And, you know, it's quite astonishing to, you know, to come out and rule certain people out rather than ruling people in. That's not usually what you do. So, I mean, that's also caught some people off guard and kind of hence reinforcing the sort of loyalty factor. I mean, he really does want people around him who are going to help, you know, push that agenda forward. And, you know, in this town in Washington, you know, when he came into power in 2016, there wasn't necessarily that MAGA infrastructure in place. And in the years since, there's all sorts of, you know, think tanks, you know, organizations that have sprung up to sort of offer forth the personnel, the people, the, you know, policy wonks who support some of these ideas that, you know, the Project 2025 stuff, which was, you know, controversial on the campaign trail, but is literally, you know, a booklet of policies written by people who would, you know, potentially serve in his administration if they were picked.
And just to head off any of the hate mail or bad tweets we're going to get from people saying, well, wait a minute. I mean, this isn't just Trump foes who are saying this about the loyalty thing. I mean, there are some Republicans even scratching their heads about some of these names that are being nominated by the president-elect.
Yeah, I think in particular, I mean, there is, you know, Pete Hegseth, the defense secretary, you know, people have been saying, you know, least qualified candidate to lead the Pentagon, you know, in history. You know, Bolton has said some things which probably wouldn't be surprising to many viewers. And Matt Gaetz, in particular, is the one that I think has a lot of Republicans, especially in the Senate, you know, scratching their heads. When reporters were asking, you know, Republican senators yesterday, there was a lot of, you know, surprise. You know, some people chortled, some people were kind of just aghast, and a lot of them promised there's going to be a lot of questions in this confirmation hearing. And so it's unclear who's going to make it through. Obviously, you know, the Republicans control the Senate, but the Senate has, as people have said, is tradition bound and you know, looks out for its own to some degree. So there could be some pushback from that, from some of the, even some of the Republicans in that institution.
What would you say is the strategy that Donald Trump has in floating these names right now? Is there something bigger going on than just actually picking the folks he thinks would be best for these positions? Like, is there a chance that Matt Gaetz won't make it through the nomination process for the Senate, the confirmation process for the Senate, and that, like, other things are going on here?
Yeah, exactly. There's been, you know, there's a lot of, you know, things swirling around D.C. at the moment, but you know, some people to some degree view Gaetz as a potential sacrificial lamb, someone who, you know, the Democrats are going to want to pull down, and once that's done, others will slip through. There's a sense maybe that he's kind of capturing attention, media attention again with some kind of surprise picks that are generating a lot of headlines, a lot of head scratching, and just getting some momentum and sort of media attention for the campaign. So it's not it's not entirely clear. I think there's a lot of people wondering. There's some people in particular pointing out the sort of pro-Israel credentials that some of the picks have, including his picks for Middle East envoy Mike Huckabee, for ambassador to Israel, Elise Stefanik, his envoy to the United Nations. And so if some people are reading into that, what kind of policy he would have. We know there's going to be, a renewal of maximum pressure on Iran, for instance. There's some sentiment out there that in the interregnum between now and January 20th that Israel will have a freer hand to potentially strike Iran. We don't know about that, but Trump has had a few calls with the Israeli Prime Minister, since he won the election and in recent weeks. So there's a lot of things. There's a lot of people are trying to sort of overlay ideological lenses on top of some of these appointments. It's not clear how much of this is sort of the chaos that a lot of people remember from the first Trump administration, and how much of it is a sort of more calculated, reflective sort of approach to the type of cabinet he wants to assemble.
Hey, I am wondering, while all of this is happening, Ian, your beat, U.S. foreign policy, who is in what post could possibly determine, whether or not other countries are sharing intelligence with us, whether or not they feel comfortable enough doing it. What are the possible implications about who ultimately lands in these seats, especially when it comes to security, national security, U.S. intelligence, foreign policy? What are the possible implications? Who is in these seats ultimately when it comes to the foreign policy stage?
Yeah, it's interesting. I mean, these foreign policy institutions, I'm at the State Department often. They are big beasts, and turning foreign policy around can sometimes be like turning a giant, freighter around, mid-ocean to some degree. But some of the picks we've seen, Director of National Intelligence Tulsi Gabbard, I was looking at some tweets of hers the other day. She has one, talking about Pearl Harbor and a fear of Japan rearming. There's a lot of views. Pete Hegseth, the defense secretary, has talked about, is allowing Israel to annex parts of the West Bank, which is, very much against the current U.S. policy. There's a lot of views out there from some of these people. It might be a bit of a fool's errand to try and pick individual comments from some of these characters and attribute them kind of forward-looking to potential Trump administration policy. These institutions, like the State Department and others, they do have a tendency of sort of they're a bit of a moderating influence to some degree. I mean, there is some tradition, there is some policy here that they have to adhere to, yeah.
All right, good to know. Ian Marlowe, Bloomberg News senior reporter covering U.S. foreign policy. Hey, still to come, we're watching Disney shares soaring as streaming ramps up at the Magic Kingdom. We've got a breakdown of Disney's business when we return on Business Week.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks losing traction following that furious post-election rally. The Dow, the S&P, NASDAQ, all in the red right now, with the S&P down 15, a drop there of 0.3%. The S&P at 59.70. The Dow right now down 90, a decline of 0.2%. NASDAQ down 0.3%, while the Russell 2000 index of small cap shares down 0.8%. 10-year at 4.41%, the 2-year 4.29%, gold up 0.1%, 25.75 the ounce, and West Texas Intermediate crude up 0.4%, 68.70 for a barrel of WTI. Bitcoin up 1%, 89,475 on Bitcoin. Federal Trade Commission is preparing to launch an investigation into anti-competitive practices at Microsoft's cloud computing business, that according to the FT, citing sources. President-elect Donald Trump's transition team plans to kill the $7,500 consumer tax credit for EV purchases, that according to Reuters. Tesla shares, they're down 4.8%. Shares of rival Rivian down 11.4%. President-elect Donald Trump, meanwhile, has ruled out giving a post to J.P. Morgan Chase's Jamie Dimon. And the New York City congestion pricing plan with a $9 toll will start in January. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, if investors in the Walt Disney Company were looking for a surprise, they certainly got it. Disney posted fiscal fourth quarter sales and profit that beat Wall Street estimates. And here's the kicker. Forecast earnings growth for the next, not 1, not 2, but 3 years, which is a rare event for a company that historically hasn't made long-range profit projections. The stock up almost 12% at its highs today. Tim, still up about 6.6%.
Yeah, the company's film studio and streaming business drove earnings. Check out Disney CFO Hugh Johnson weighing in on streaming earlier on Bloomberg TV.
We feel optimistic about, as the industry is coming together, we're going to continue to both add subscribers, and in addition to that, because of the value we're delivering with the great IP and the great product that we're putting into this service, we'll be able to take pricing as well. And that combined with good cost management that we have in place in terms of good disciplines on that business, we feel very optimistic about where streaming is going for us.
Well, there you have it. Disney CFO Hugh F. Johnson earlier on Bloomberg saying he feels very optimistic about where streaming is going. Disney shares, by the way, soaring by the most in nearly 4 years on an intraday basis, right now higher by about 6.8%.
Yeah, but definitely a significant move. Let's get more on the magic being back in parts of the Magic Kingdom. Back with us is Bloomberg Intelligence technology and media analyst Geetha Ranganathan. She joins us from BI headquarters over there in Princeton, New Jersey. Geetha, good to have you here with us. First up, it is a surprise, right?
Huge surprise, Carol. We never really expected them to lay out guidance the way they did.
Why do you think they did this? I mean, there's a lot to, it's hard to see the future for any company a couple quarters. Why take that risk and go out on a limb and say, this is what we think it's going to look like 2-3 years from now?
Yeah. Because I think the biggest story for Disney over the past few quarters, Tim, has been kind of this lack of certainty. It's been the lack of visibility into so many different parts of their business, most notably the parks business, because we've seen kind of demand moderate pretty significantly. And I think there was a lot of concern amongst investors that that is going to weigh really badly on earnings in 2025. And so we saw them kind of guiding to, high single-digit EPS growth and also pretty robust park growth, high single-digit operating income at the parks as well, which is actually an acceleration from 2024. So it kind of looks like things are really clearing up. And then in terms of, laying out the long-term guidance, it just tells us that they really have all of these multiple growth levers in place. You look at the streaming business, of course, profitability was a huge concern there. They've finally kind of turned the tide there. And then studios, which had a whole bunch of misfires and, underwhelming performances, finally has delivered 2 back-to-back hits with Inside Out and Deadpool, both of those films making $3 billion at the global box office. And then you just look at the lineup and it's fabulous.
So what did Bob Iger do to right this ship?
There was a lot of course correction that was needed, Carol, especially at the content division, most notably at the film studio. We know what had happened. You know, the pandemic obviously had shut down everything. The theatrical business was down in the dumps. They were prioritizing their streaming business, but greenlighting shows like crazy. And in that whole race for, quantity, quality kind of got sacrificed a lot. And it also led to a lot of, confusion, I think, amongst viewers because you had so many different Star Wars series, so many different Marvel series. Nobody knows what's going on. None of the storylines are clear. And so they kind of really had to take a step back and press the reset button a little bit. And that's exactly what they've done. And I think it's paying off big time.
I've got to say, I was over Marveled. Like, I kind of had to step back. I was kind of all in. My daughter got me hooked. I was watching
superheroes?
kind of the offshoots in the series. And I was like, okay, now, not quite jumping the shark, but it felt a little bit like it.
Okay, I do want to talk, Geetha, a little bit about the direct-to-consumer business and hear from you about how they were able to go well above Wall Street estimates, posting this profit of $321 million in the period.
So with the direct-to-consumer business, yes, they've suffered huge losses over the past 2 years, over $6.5 billion. So investors were really looking for some clarity in terms of profits. And really, most of the levers that they've pulled so far, Tim, have been on the cost side. So whether it's content costs, as well as marketing and other technological costs, they've really kind of pared back on that. Going forward, though, the profit story is not going to be driven. I mean, of course, it is going to be driven by more cost efficiencies, but really the growth driver there is going to be on the revenue side. And the way that they get the revenue kind of pumped up is through price increases, through growing their advertising business, through cracking down on password sharing, kind of really taking a page out of the Netflix playbook.
What about, though, I thought it was interesting that the CFO, Johnston, suggested that Disney wouldn't consider a similar path in terms of what we're seeing from someone like a Comcast, which is considering spinning off its cable networks into a new company. He still sees, Johnson, the CFO of Disney, an important integration between linear TV and streaming. Like, they still get it. Is there something special in the Disney mix that enables them to do something that others cannot?
So Disney does have a unique collection of assets. I mean, I think the big one there really is ESPN, Carol, and ESPN has been the glue that has held not just the Disney bundle together, it's held kind of the whole TV ecosystem together in many ways. So obviously they want to play it cool. They want to make sure that, the ESPN subscriber base is definitely protected. But I think all bets are off the table come summer of 2025, because that's when you have flagship ESPN. So you have a standalone ESPN product coming to the market. And once they're able to get that off the ground and running really well, then I think they're going to come back and revisit this whole question on what they want to do with their TV network business.
Okay, more on Disney Plus. I'm going to go there. Bluey. I just wonder how important...
Someone has little ones at home.
I just wonder how important Bluey is to Disney Plus and the missed opportunity that Disney has, not having the rights to it, to create theme park attractions around Bluey.
Super important, right? Bluey was one of their most viewed properties ever. I mean, more than, so many of the big Disney movies, just been a home run for them. And yeah, it would have been really great to have, some theme park rides kind of associated with that. Having said that, though, Tim, I mean, they have so much more that we have to look forward to on the theme park business. Remember, they are investing $60 billion over a span of 10 years. And it's not just at the parks, it's also in cruise ships, vacation properties all across the board. So yeah, while Bluey is a little bit of a disappointment, I think they have other levers that they can pull.
All right, so does this mean Bob Iger sticks around a little longer?
Maybe.
Oh, no. Are you serious?
I mean, publicly they've said that he's going to leave in 2026. I think this time he actually leaves for real. I mean, it looks like James Gorman has kind of his eyes set on finding a suitable successor. They're looking, of course, internally at all the section chiefs, whether that's Josh DeMauro, Jimmy Pitaro, Dana Walden. But they're also now broadening that scope to look externally as well. So I think they are going to get the right person for the job, and hopefully Iger can finally leave.
Great stuff, as always. Thank you so much. Geetha, be well. Bloomberg Intelligence Technology and Media Analyst Geetha Ranganathan joining us right there from our BI headquarters in Princeton, New Jersey.
Hey, down in Peru, Lisa Abramowicz is speaking with Jamie Dimon. He's up on stage now for his first public appearance since Trump's victory. And of course, in the minutes that since Trump said he would not be part of the administration, Lisa asked him about that. Here's what he said, quote, "I've not had a boss in 25 years and I'm not ready to start." That's what he said he'd tell Trump, who did just post on Truth Social that Dimon will not be joining the administration.
That's Jamie Dimon. All right, more to come, certainly on that conversation with Jamie as well. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Carol Massar. I'm Tim Stenivek. What would you like to hear about on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg Audience Survey. You can do that one of two ways. Check out the QR code on the screen right now if you're watching us on TV or YouTube, or visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the survey. It's hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg Podcasts.
All right, so billionaire financier Ken Griffin, who decamped from Chicago to Miami in 2022, you might recall that, has sold 4 out of 7 of his Chicago properties, all at a discount. And he's trying to sell a 5th one for $8.5 million.
Okay, just in September, NBA legend Michael Jordan also found a buyer for the 32,000 square foot Chicago suburb mansion that he's spent more than a decade trying to flip. This, Carol, after cutting its price by half.
And there's more. There's another house in the affluent Lincoln Park neighborhood. It sold for about $15 million in August after first listing 8 years ago for a lot more, like $50 million. We could go on and on and on, but we got to leave something for our reporter to talk about.
Yeah, Miranda Davis is Bloomberg News national desk reporter. She joins us from Chicago. Miranda, wealthy descending on Chicago. What's going on with the real estate market there right now that's leading these homes to be sold at such a discount?
Yeah, I mean, I think, well, first, thank you for having me. One really big thing that we're seeing when I'm speaking to agents everywhere is that the city had a relatively positive summer. Chicago's gotten kind of a bad rap in recent years, but we had a very successful NASCAR event. We had the Democratic National Convention. We had Lollapalooza, and those all went off kind of seamlessly. And so a lot of the agents are saying people are starting to come back to the city. They're showing interest, especially at that really high end. You know, we here in Chicago, the prices are a little bit lower for our high end. We say $4 million and up, but the buyers are coming back, but they're coming back at a discount.
All right. I mean, we're talking about some mega discounts. Is this just a case of price correct, meaning they were just so inflated to begin with that was wrong and this makes more sense, or it's something that's really going on in terms of Chicago and some of the wealthy, super wealthy, uber wealthy kind of saying bye-bye?
Well, that's a really good question. I think the answer is both and. And what I mean by that is that, especially if you think about the Michael Jordan house, I don't know if you've ever seen photos of that. There are some photos in the story, but it's unique. It's unique.
You don't have your number, meaning you're
on the gate.
I know, right? We don't have our jersey number on the gate. Exactly.
I don't have a jersey number.
It was incredibly custom to Jordan himself, and so I think there was always a sense that there was going to be hard to find a buyer that wasn't a super fan of Jordan or willing to completely scrap the property. And it's not yet clear what's going to happen to that one or what the closing price is going to be. But if you look at that mansion we touched on in Lincoln Park, you know, that was another example of very elaborate, very custom. It would have been hard to find a buyer at the price that they were expecting. I don't think that buyer would have ever come. But I think with Ken's properties, you know, what we're really seeing is that there aren't a lot of buyers. It's a very small buyer pool for those very elite properties at the top of the market, even if they are not over custom, even if they're just, you know, very like standard, but obviously luxury.
I will say the house that was in Home Alone
I love that
many
house.
decades ago, it's out in Winnetka, Illinois, so one of the Chicago suburbs, a very pricey one. That hit the market earlier this year for $5.25 million. According to Zillow, Carol, the sale is pending. So we don't know how much it went for, but the Chicago, or the Winnetka home of the McAllister family.
Yeah, I love that.
Back
I love
on the
that.
market.
It makes you all want to go, what, right? What's
Yeah,
it like?
exactly.
Kevin
Macaulay.
did. Yeah. All right. Having said that, the other thing I think about is the corporate presence that has been slowly moving out of the Chicago area, you know, whether it's Boeing, whether it's, you know, Griffin taking Citadel out of there. That's a big deal. These are people, you've got a lot of senior executives who will tap into this, you know, expensive real estate market. That's got to be at play too.
You know, I think so. And I think it's also perhaps maybe even a little bit at play in the small amounts of recovery we're seeing. You know, I get the sense that, and the thing that I hear very often from brokers that especially specialize in the downtown condo market is like, you know, the suburbs have been fine for the most part. You know, sometimes there's something that's a little bit, you know, out of the ordinary or it's not selling as fast, but overall people have been flocking to the suburbs specifically since the pandemic. But as we're seeing these, you know, luxury condos start to close again, it kind of asks the question, essentially, are workers coming back and are CEOs coming back? And so, you know, we haven't quite yet see that play out, but I do think that that's some sort of a factor in this.
All right, interesting stuff. So appreciate it. Hey, Miranda, thank you so much. Miranda Davis, national desk reporter at Bloomberg News, joining us there from our Chicago bureau. I think the Michael Jordan home would work for you.
Yeah, I mean, I don't need the basketball court inside, but I wouldn't say no to it.
You wouldn't know?
I wouldn't say no.
A lot of room for the kids to run around.
A lot of room for the kids, yeah.
Fenced
Good
in.
way to get energy out.
But it's interesting, right? The kind of wax and wane of metropolitan areas, major cities, depending on when a major employer leaves or several major
Look at Detroit
employers.
a generation ago.
Yeah, I mean, I was talking with someone about, like, you know, look at what's going on in Florida. So much of the financial community moving down there. Look at what's going on in Texas as people relocate. So things moving around a lot. We're not going anywhere because coming up is Fed Chair Jay Powell. We're going to take you to his speech and that Q&A, take you there live and listen in across the Bloomberg platforms. This is Bloomberg Business Week.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 60 minutes away from the closing bell, starting to get some headlines in connection with this speech that we are about to hear from Fed Chair Jay Powell. Jay Powell, in these remarks, released ahead of that speech, inflation heading toward 2% on a sometimes bumpy path. We can approach decisions carefully amid a strong economy, and the economy not signaling a need for the Fed to hurry rate cuts, which is kind of interesting considering we've got just, one more meeting to go before we wrap up 2024. We've got a December meeting. Traders expecting a rate cut, but maybe that's not the case.
Yeah, these are prepared remarks that we expect to hear from Fed Chair Jay Powell in just a few minutes in Dallas when he gets started. But we got a little preview of them, and here's what he says. Quote, "The strength we are currently seeing in the economy gives us the ability to approach our decisions carefully." Remember, U.S. central bankers began lowering borrowing costs back in September, that aggressive half-point rate cut, and then lowered that rate again by a quarter point last week. We'll see what happens come December.
Just want to mention, I'm looking at the 2-year right now, moving up here in terms of the yield, 431. So we've definitely seen a bump up. 5-year just a little bit higher as well on those Jay Powell remarks, 431. And if I look at the longer end, the 10-year specifically, we're looking at a yield of about 442. We've been bouncing around a bit today. We did get an inflation read, PPI earlier today. But again, very interesting to say that inflation heading toward 2% on a sometimes bumpy path, which means can go up, can come down, but it makes it kind of tough to figure out where it's going to land, is my read on that. And then I think what's really key is that Jay Powell saying the economy not signaling a need for the Federal Reserve to hurry those rate cuts, and that's why you're seeing a tick up all along the U.S. Treasury curve.
Well, in just a minute, we're going to go live to Fed Chair Jerome Powell. A speech and a Q&A in Dallas, Texas, set to start in just a few minutes. I see introductory remarks being given right now. We'll bring his comments to you live as soon as they air. And also, Jamie Dimon speaking to our own Lisa Abramowitz down in Peru right now.
Yeah, super important voice, too, on the economy, on the financial system, on the credit picture, if you will. He is sitting down with Lisa Abramowitz, so we're going to hear a little bit later on from that conversation as well. And then we're going to finish up with some lighter fare on Martha Stewart. There's a new documentary, in case you missed it, so we're going to get into that in just a moment. But I do want to get to a story as we await Jay Powell to get up on the stage. We're going to just kind of continue monitoring. In the meantime, quick check on that trade. Here is Charlie Pellet.
Thank you very much. Quick check indeed with the S&P down 26 right now, 59.59 where we stand. We got 58 minutes to go ahead of the closing bell. Right now, the S&P down 0.4%. Dow Industrials down 0.3%. NASDAQ lower by 0.5. Your 10-year 4.42%. Your 2-year 4.31%. Gold down 0.1%. 25.70 the ounce. West Texas Intermediate crude up 0.3%. 68.66 for a barrel of WTI, and Bitcoin right now up 0.5%, 89,100 on Bitcoin. President-elect Donald Trump's transition team plans to kill the $7,500 consumer tax credit for EV purchases. That, according to Reuters, citing two sources. Tesla shares down 5.2%, Rivian down 12.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are awaiting a speech and a Q&A with Fed Chair Jay Powell. He is in Dallas. We'll take you there in just a moment. But in the meantime, we are our own team weighing in on a right through and saying Fed Chair Jay Powell said the recent performance of the U.S. economy has been remarkably good, giving central bankers room to lower interest rates at a careful pace. And right now you're looking at a 2-year note that has really kicked up to its highs of the session. So now at 4.32, looking at the longer end of the yield curve, we're looking at a 10-year at 4.43. So you're seeing a bit of a squeeze there along the yield curve.
Yeah, here's what Powell said in those prepared remarks, which we do expect to hear from him in just a few minutes. Quote, "The economy is not sending any signals that we need to be in a hurry to lower rates. The strength we are currently seeing in the economy gives us the ability to approach our decisions carefully."
Yeah, I think this is key too. Inflation is running much closer to our 2% longer run goal, but it is not there yet. These are the words of Jay Powell in those prepared remarks. He went on to say, "We are committed to finishing the job with labor market conditions in rough balance and inflation expectations well anchored. I expect inflation to continue to come down toward our 2% objective, albeit on a sometimes bumpy path. So we are expecting to hear this when he steps up to that podium in Dallas.
Remember, data out earlier this week showed a measure of underlying U.S. inflation remaining firm in October. So-called core CPI, it excludes food and energy costs, increased 0.3% for a third month. Powell said, quote, inflation is running much closer to our 2% longer run goal, but it's not there yet. We are committed to finishing the job with labor market conditions in rough balance and inflation expectations well anchored. I expect inflation to continue to come down toward our 2% objective, as you mentioned, albeit at a sometimes bumpy path.
Yeah, and on a day where we got, unemployment claims today, which came bang in line, and actually a little bit lighter in terms of those weekly jobless claims numbers. They did ease, but even this as further layoffs loom, as we reported out earlier today, Jay Powell on the labor market saying it has cooled but remains solid. So we'll look for some more nuances perhaps in how he characterizes it. And I think what's going to be interesting is we are laying out pretty much what Jay Powell's going to say in his speech. You're getting kind of the main point, but it'll be interesting in that Q&A session whether or not he is pushed on, that inflation target, whether that 2% goal is actually achievable, how long it might take, and what's involved. And then if he's pushed a little bit more on holding off, does that mean a December rate cut is less likely? Because if you look at what's happening, certainly in the Treasury trade, you're definitely seeing yields move up all along the curve.
I'm still interested in politics and how he's viewing the incoming Trump administration. Remember, he was appointed first by Donald Trump during Trump's first term. Trump then put a lot of pressure on him to lower rates at the Federal Reserve. He ultimately stayed on and was reappointed by President Biden. His term ends in a little over a year, in 2026. He's been very curt, I would say, with replies to how he's thinking about politics last week. So I'll see if he has any other questions asked of him in that vein.
And I think he's very clear that he's like, gotta wait and see what the Trump administration, the policies that actually take effect that impact the business environment, the economic environment, before you can kind of figure out what Fed policy needs to be to address those policies. So we will see what he says on that front. I think he's going to be probably pretty careful in terms of the political side of things. Keep in mind, we did get CPI. Underlying U.S. inflation remained firm in the month of October. Got another read on PPI today. He says it's running closer to their 2% longer run goal, but it is not there yet. And I feel like that is something we have heard many times, Tim, from the Fed chair over the last few months, that it's kind of a start and stop move in terms of hitting that 2% goal. They are way down from where we were certainly 1 year ago when inflation was 8-9%, but very different today. But it seems sticking that landing, that 2% landing, has proven to be difficult for the Fed.
Yeah, the U.S. economy continues to expand at a robust pace, averaging about 3% growth over the past 2 years. The labor market, meanwhile, has cooled but remains resilient. Powell said the labor market is in, quote, solid condition, and said by many metrics it's back to, quote, more normal levels consistent with the maximum employment mandate. He said, quote, improving supply conditions have supported this strong performance of the economy. The labor force has expanded rapidly, and productivity has grown faster over the past 5 years than its pace in 2 decades before the pandemic, increasing the productive capacity of the economy and allowing rapid economic growth without overheating.
What's interesting is it's like a parent talking to your kid. Hey, listen, folks, and this is Jay Powell in his comments, prepared remarks. Ultimately, the path of the policy rate will depend on how the incoming data and the economic outlook evolve. It's like when a parent's saying to a kid, hey, we're just going to have to wait and see how things play out. We'll see, and we'll figure it out.
We'll see what happens next semester.
But it's data dependency. And as we've talked with our own Mike McKee, we've got another inflation report before that next Fed meeting in December. We have other reports that are going to come our way, including a labor report. So there's lots of pieces that will continue to tell the story of the U.S. economy, and that will ultimately figure out where the Fed needs to go in terms of policy. The thing they do not want to do is cut rates too much or too quickly so that inflation rears its ugly head again. And especially when you are facing an administration with a lot of pro-growth policies.
So that's what I want to talk about, and also not just pro-growth policies, but also those policies about tariffs. So if tariffs are indeed inflationary, and we do see that coming, then what does that mean for the Fed?
All right, to Dallas we go, and Fed Chair Jay Powell.
Thank you very much. Good afternoon. Thank you to the World Affairs Council, to the Federal Reserve Bank of Dallas, and to the Dallas Regional Chamber for the kind invitation to be with you today. I have just a few brief comments on the economy and monetary policy before we move to our conversation. So looking back, the U.S. economy has weathered a global pandemic and its aftermath and is now back to a good place. The economy has made significant progress toward our dual mandate goals of maximum employment and stable prices. The labor market remains in solid condition. Inflation has eased substantially from its peak, and we believe it is on a sustainable path to our 2% goal. We are committed to maintaining our economy's strength by returning inflation to our goal while supporting maximum employment. The recent performance of our economy has been remarkably good, by far the best of any major economy in the world. Economic output grew by more than 3% last year and is expanding at a stout 2.5% rate so far this year. Growth in consumer spending has remained strong, supported by increases in disposable income and solid household balance sheets. Business investment in equipment and intangibles has accelerated over the past year. In contrast, activity in the housing sector has been weak. Improving supply conditions have supported this strong performance of the economy. The labor force has expanded rapidly, and productivity has grown faster over the past 5 years than its pace in the two decades before the pandemic, increasing the productive capacity of the economy and allowing rapid economic growth without overheating. The labor market remains in solid condition, having cooled off from the significantly overheated conditions of a couple of years ago, and is now, by many metrics, back to more normal levels that are consistent with our employment mandate. The number of job openings is now just slightly above the number of unemployed Americans seeking work. The rate at which workers quit their jobs is below the pre-pandemic pace after touching historic highs 2 years ago. Wages are still increasing, but at a more sustainable pace, and hiring has slowed from earlier in the year. The most recent jobs report for October reflected significant effects from hurricanes and labor strikes, making it difficult to get a clear signal. Finally, at 4.1%, the unemployment rate is notably higher than a year ago, but has flattened out in recent months and remains historically low. Turning to inflation, the labor market has cooled to the point where it is no longer a source of significant inflationary pressures. This cooling and the substantial improvement in broader supply conditions have brought inflation down significantly over the past 2 years, from its mid-2022 peak above 7%. Progress on inflation has been broad-based. Estimates based on the Consumer Price Index and other data released this week indicate that total PCE prices rose 2.3% over the 12 months ending in October, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Core measures of goods and services inflation, excluding housing, fell rapidly over the past 2 years and have returned to rates closer to those consistent with our goals. We expect that these rates will continue to fluctuate in their recent ranges, and we're watching carefully to be sure that they do, however, just as we are closely tracking the gradual decline in housing services inflation, which has yet to fully normalize. Inflation is running much closer to our 2% goal, but it's not there yet, and we are committed to finishing the job. With labor market conditions in rough balance and inflation expectations well anchored, I expect inflation to continue to come down toward our 2% objective, albeit on a sometimes bumpy path. Given progress toward our inflation goal and the cooling of labor market conditions, last week my Federal Open Market Committee colleagues and I took another step in reducing the degree of policy restraint by lowering our policy interest rate by a 0.25 percentage point. We're confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks to both sides. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. We're moving policy over time to a more normal setting, but the path for getting there is not preset. In considering additional adjustments to the target range for the federal funds rate, we will carefully assess incoming data, the evolving outlook, and the balance of risks. The economy is not sending any signals that we need to be in a hurry to lower rates. The strength we're currently seeing in the economy gives us the ability to approach our decisions carefully. Ultimately, the path of the policy rate will depend on how the incoming data and the economic outlook evolve. We remain resolute in our commitment to the dual mandate given to us by Congress: maximum employment and price stability. Our aim has been to return inflation to our objective without the kind of painful rise in unemployment that has often accompanied past efforts to bring down high inflation. That would be a highly desirable result for the communities, families, and businesses we serve. While the task is not complete, we've made a good deal of progress toward that outcome. Thank you very much, and I look forward to our discussion.
All right, everybody. Of course, that was Jay Powell, Fed Chair. He is in Dallas, just completing some brief comments on the U.S. economy. The headlines there, the economy not signaling a need for the Fed to hurry rate cuts. Now we go to the Q&A portion. Back to Fed Chair Jay Powell.
The importance of an independent central bank. No particular reason, I'm sure, that was the topic of the day. We have a lot of students here today. I'm wondering if you could just explain in general why there is this bromide about it's important for the central bank to be politically independent.
Sure, I'd be glad to. Let me say what we mean by independence first. So what that really means is that the decisions that we make about monetary policy, about interest rates, cannot be reversed by any other part of the government except, of course, Congress. Congress created the Federal Reserve by statute and can do what it wishes to do by statute, but our decisions are not reviewable by any other agency. And we are charged to make those decisions with regard to the medium and longer term well-being of the public that we serve. So we're not thinking as we make our decisions about the well-being of any political party or anything like that. So we're just looking at the macroeconomics and doing the very best we can. There's been a lot of research about central bank independence, and what it shows is that central banks who are independent, meaning independent from the other parts of the government, do a better job on inflation. And that makes a lot of sense because, we're thinking really just of getting inflation under control while keeping the labor market strong, and we're not thinking of political factors, which would frankly be a distraction to the already difficult work that we have to do the main job. So the academic research is very clear globally, by the way. This has been a global trend for more than the past 50 years. Advanced economies like the United States economy around the world all have central bank independence of one part or another, in one form or another. The other thing I'll add is that what comes with that, on our part, is an obligation to be highly transparent about what we do, to explain ourselves to the public, to Congress. Congress has oversight over the Federal Reserve in our system. So we spend a great deal of time talking to the oversight committees and the broader Congress in the House and the Senate, explaining to them why we're doing what we're doing. I testify as a matter of statute 2 times of the year in each of the House and Senate. So that kind of gives us the accountability that we need to be democratically legitimate in a situation where we do have some independence.
The macroeconomic conditions that you just described in your remarks sound tantalizingly close to a soft landing. I know you're not willing to declare victory yet. To what extent do you think the fact that the Federal Reserve is credibly independent is responsible for the good outcomes that we've had so far?
So the credibility is really everything in our work. And I think, as you know, inflation spiked really globally, all around the world, as the economies around the world reopened after the pandemic shut down, and on the back of a lot of fiscal and monetary stimulus. We saw a burst of inflation all around the world. And what happened is we raised interest rates to bring that down, but the public had faith. We measure inflation expectations many different ways, surveys and based on market-based instruments, and they all kind of showed the same thing, which is the public all through all this believed that we would get inflation down, that we would restore price stability, which we define as 2% inflation. And that's ultimately the key to it. Inflation is a social phenomenon. If people believe that inflation will be higher, then it probably will be. And if they believe that inflation will come down, then people who make and take prices and wages, they will make sure that it does come down. So it's absolutely critical that we be credible. And part of that is that we responded so forcefully when it became clear that inflation needed a response from us. We responded quite forcefully, and we think that helped keep inflation expectations anchored, as we say.
And then one last question, and then we can move on, I promise, on this. There have been times in U.S. history when people look back and say that the Fed was not seen as terribly independent. What did we learn from those episodes, in your view?
Well, if you go back to the period of the high inflation, which I'm old enough to remember, it was during my college years, and basically the public kind of lost faith that the Fed would restore price stability, and you know, the cost was a decade of very high and very volatile inflation, quite difficult business conditions, extremely difficult for people on a fixed income. Think what that does. You may have felt it. If you're on a fixed income and prices go up 20%, you're just in trouble right away. So inflation is worst for people at the lower end of the income spectrum and the wealth spectrum. So we've seen it here in the United States in the 1970s, actually, and it's not a pretty picture. So, you know, I think this is very widely, by the way, understood and supported. You know, I've spent a lot of time on Capitol Hill, and I think where it really matters on both sides of Capitol Hill, the Senate and the House, in both political parties, there's a broad understanding that an independent central bank is very important in just serving the public as best we can. We're not perfect. Everyone makes mistakes, but you'll get the best results if you have people who are just focused on that task and separate from politics.
Thanks. So a little bit more elaboration from what we heard last week at the press conference on this question. In that press conference, you basically downplayed the impact of the election on FOMC policy. You said we needed to kind of wait and see. But that does stand in contrast to how the FOMC behaved at the December 2016 meeting, when roughly half of committee participants, according to the transcripts, upgraded their economic forecasts based on expected changes to fiscal policy under a Trump administration, and in particular a previous trifecta in which the Republicans controlled both chambers of Congress and the White House. You were, in fact, one of the policymakers who made changes to your forecast, finding that the staff's assumptions around a tax cut was a reasonable placeholder, which gave you greater confidence in the outlook. Does that approach seem reasonable in the current circumstances? That basically, you know, since the FOMC has been starting to judge some downside risks to the growth outlook, does the election and the results that we have today remove or at least substantially mitigate downside risks to growth?
So that's your question? So I think it's too early to reach judgments here, and I'll tell you why. So the job of staff is to go, you know, and be very nimble and make assessments in real time, much like capital markets do. You know, the markets are pricing in assessments of what policy changes will be made and what their effect on the economy will be. And staff will do all of that. I think policymakers are going to wait longer to see what the actual effects will be. And so, for sure, at our December meeting, staff will present what we know. But the thing is, we don't actually really know what policies will be put in place. We know that policies in several areas will change. We don't know how much. We don't know over what time frame. When it comes to fiscal policy, it takes quite a long time to get a bill through Congress. And I think this year, what we're looking at is something that doesn't need to get done until the end of the year, and therefore probably won't have any economic effects this year. But it'll be more 2000 or 25. It'll be 26 or 27. So I think we have time to make assessments about what the net effects of policy changes will be on the economy before we react with policy. That's not to say we won't be doing quite a lot of analysis And the analysis we do, by the way, is informed by the best research, the best thinking, the best experts, and there's a lot of research on the effect of policy changes on the economy. We'll make those assessments, but I think we'll be careful about changing policy until we have a lot more certainty.
You've spoken before about federal debt as being at unsustainable levels and the potential consequences for growth. Do we get to a point where deficits and debt get so high that it makes your job harder, essentially, that makes it harder for the Fed to achieve its goals?
So we're not at that point now. I want to be clear that we're not in any way taking into account fiscal issues when we make our, let me say it this way, the debt issue is not an issue that is guiding us in making our economic judgments. Fiscal policy can, of course, affect the economy. First of all, we do not have a role of supervising the elected branches that do fiscal policy. In fact, it's the other way around. So we don't give them specific advice. But as I have often said, and as all of my predecessors have noted, the U.S. federal government budget is on an unsustainable path. It's not that the debt we have is at an unsustainable level. It's not. It's that we're on a path that's not going to be sustainable. We have a very large deficit at a time when we're at full employment, and I would just say we know that we're going to need to address that, and it's going to need to be done sooner or later, and sooner is better than later. But I leave it at that.
In addition to the potential long-term risks that higher deficits and debt present for growth, are there also risks to the functionality of the Treasury market? When shocks hit the market, and if so, how might the Fed respond?
Well, the functioning of the Treasury market is incredibly important, and it does function very well. It's the most liquid and most important, probably, financial market in the world, certainly one of the most important. And we did see some, at the beginning of the pandemic, you may remember that the Treasury market lost function because normally in an emergency, money flies into the Treasury market, but the pandemic was such an unusual event. People didn't want to own longer-term securities. They only wanted to own, effectively, cash. And so we had to jump in and support that. I think more broadly than that, it's just important that the Treasury market remain well-regulated, and that companies have an incentive to do intermediation in the Treasury market. It's relatively low risk. It's very important for the economy. And it's important that be the case.
In the March 2020 episode that you're referring to, the Fed ultimately had to step in as a lender of last resort. Would the Fed do that if there were similar disruptions in the initial issuance of Treasuries? That was in the secondary market, as I recall.
We're not a fiscal actor, so that was a situation where we have a mandate that we share with other agencies to look after the financial stability, And part of that is if really important markets break down, and they kind of all broke down at the beginning of the pandemic. They just stopped working. And so we set up a series of facilities to backstop those markets, but they actually didn't get used because just the fact that we had the facilities restored credibility, and the markets started working on their own. It was remarkable. So in the case of a financial stability event like that, or the global financial crisis, where really the whole global financial system was at risk given the failure of a number of large financial institutions around the world, in those kinds of things we can use these emergency tools, but they're not for every event. They're really for financial stability events.
You mentioned that it's a little bit too early to know what policy beyond the remit of the Fed would look like. We don't know exactly what the fiscal picture will look like, but we do know directionally that tariffs are likely to go up, right? Even if we don't know how much, we don't know necessarily if it'll be exactly what was described on the campaign. And I'm wondering how you're thinking about that. Go on, sorry.
So what matters for us is we don't stand in judgment over these policies in any way. What matters for us is to what extent will new policies have an effect on our mandate goals of maximum employment and price stability, and do we need to change our policy because of these changes in order to achieve those goals? And that's the answer to that question is not obvious. Let's say that there will be some tariffs. We have no idea what that's going to look like. That's one thing. Another thing is, what about retaliation? That changes the picture. In addition, that's happening at a time when there could be fiscal policy, which could be supportive of the economy. So what's really the net effect? We don't take one piece of this. We're looking at the whole economy. In addition, remember, this is way over a $20 trillion economy. Many, many things affect the economy all the time. It's not that common that changes in government policy have immediate effects in the achievement of our goals. That could be the case, and of course we will use our tools as we're supposed to do to foster the achievement of maximum employment and price stability. That's what we do. That's what we always do, and we'll do it here. I'm just saying we're going to be careful to wait and better understand the net effects of these things as those things affect the achievement of our goals.
If you look back to the previous round of trade wars under Trump's first term, the Fed staff prepared a report in the 2018 Teal Book where they basically talked about whether the Fed should be looking through any price increases that result from tariffs and assume that it's a one-time step up in prices as opposed to self-perpetuating inflation or not. And the staff said at the time that the Fed should look through the tariff increases so long as, one, you think it's going to be a one-time adjustment and not a series of adjustments, and two, so long as inflation expectations are anchored. It's not obvious that either of those conditions will hold the next time around, right? Back in 2018, we had decades of very low inflation. Now we've had a much more recent experience with higher inflation. And as you point out, there could be a series of retaliations and tariffs and counter tariffs and counter tariffs. So are the risks bigger this time that a price shock could feed into trend inflation?
They're different. We're in a different situation. The debt situation has changed substantially. And you're right, we're not, 6 years ago and such, the inflation was really low and inflation expectations were low. Now we've come way back down, but we're not back where we were. It's a different situation. Inflation is still running above 2%. But we'll take all of that into account. I tell you, though, the answer isn't obvious until we see the actual policies, and even then it's not obvious. So I just think we reserve judgment until we actually know what we're talking about. And I don't want to speculate. I don't want to guess. I think it's more important that we wait and see what actually happens.
Last time around, as you suggested, there were mixed consequences. There were mixed effects. And as I recall, during these previous trade wars, the Fed actually cut rates several times because there were consequences for growth and investment and confidence. So how does the Fed respond if higher tariffs result in both higher prices and slower growth? Do you have the tools to respond to that?
Well, so you're absolutely right. So in 2000 and I guess it was 19, we cut rates 3 times, and that was right after there had been fiscal stimulus, there had been tariffs, and so it really was because the net effect of what was happening, and what was happening around the world too. There was global growth was really soft. There was a feeling that the U.S. economy was softening. We actually cut rates 3 times, I guess beginning in mid-year, and that kind of worked. That restored confidence. We felt at the end of 2019, we felt like that had really worked, and that situation was quite a good one. Of course, then the pandemic arrived, and none of it mattered. So that's the way it happened. But that's exactly my point, though. We had a meeting the prior December, and it briefed us on what might happen. But what actually happened was something quite different. So and I'm not talking about the pandemic. I just mean the way that played out. I don't think we started that year thinking that it would be appropriate to cut rates 3 times. So just know that we will do what we believe is the right thing. That's what we're always going to do. But I think it's really important to reserve judgment and see how this plays out. We're still months away from a new administration, let alone knowing the real details of what's going to happen and then being able to project what will be the net effects on the economy.
Another major factor in the economy in the past year or so, you've said, is immigration. That immigration is a strong reason why supply and demand have gotten closer into alignment. In the past few months, we've already seen big decreases in immigration. What effect do you think that is likely to have on the macroeconomy in the near term?
So before I answer that, I do want to say that immigration is a question to be addressed by political authorities using such values as they deem appropriate. We're looking at the macroeconomic effects and reporting on them. It's not a question of judging. We don't have a view on the right level of immigration. That is for the voting public and their elected representatives. Okay. But what we saw over 2023 and 24 was a surge in immigration, and also a surge in the labor force, and it certainly pushed up economic growth, and it may or may not have had some effect on getting the labor market back into balance. It'll take time to really understand that, but it certainly made for a bigger economy. And we're coming off the back of a severe labor shortage, so there was room at that time for people to get work, and they went to work at roughly the same level as non-immigrants went to work. So that happened. Then the rules changed. The current administration, the Biden administration, changed the rules a few months back, and we've seen that come down. These are judgments that get to be made by elected people about what the right thing for the country as a whole is, not by us. But you ask what the effects will be. You will see. Really, there have been two supply side things that have been pushing up U.S. potential output and actual output. One of them is just more workers, and the other one is productivity. And the more workers part of it is probably diminishing in its effects, and so that won't be something that's pushing up overall output. At the same time, the number of job openings has come way down, so it's not clear what the overall effect will be on there's about one job opening for every unemployed person now. In terms of productivity is incredibly important. That's just output per hour. And if you think about it, higher output per hour is really the only way for incomes to go up over time among the public. And we've actually had, for the first time in a while, a few years of higher productivity, going back 5 years now. This is incredibly important and very positive, and we hope it continues. And there's no reason why it can't. I will say, though, that over the past 50 years, if you look at it, if you have 1 or 2 or 3 years of high productivity, it tends to revert to the trend really quickly. Because it tends to be driven by longer run things like evolving technology and evolving educational levels and things like that. So you don't tend to get big increases of productivity that are sustained very often. It's quite rare, although it has happened.
I do want to ask you some more questions about productivity, but just one follow-up on the immigration point. So economic growth is about the size of the workforce and how productive that workforce is. I asked before about the consequences of decelerating immigration. What happens if the workforce actually shrinks as a result of, for example, mass deportations, which may be in the offing?
I'm not going to be comfortable speculating on potential policies. It's not our job to be a commentator on.
No, I'm not asking whether it's good or bad. I'm just asking, what does it mean if the workforce shrinks?
I think we can do the arithmetic. If there are fewer workers, there'll be less work done. But we don't. It gets too close to, I just don't want to go there. This is getting me into political issues that I really want to stay as far away from it as I possibly can.
All right, so let's talk about productivity. You're right that productivity has been above trend. I think 8 out of the last 9 quarters GDP growth has been above trend, largely because of productivity. To what do you attribute that?
So this is something people will be arguing about in decades from now, but I would give you 4 or 5 candidates. So one of them is that in the pandemic, people started a lot of businesses, and that many of those fail fairly quickly, or don't turn out to matter. But when there's a burst of activity in starting businesses, there tends empirically to be higher productivity, because many of these are technologically driven, or the use of technology is pushed out into the society. So that's one. Another is that unlike a lot of our, for example, European countries, where they kept the labor force in place, here, people had money from government transfers and also from forced savings. They couldn't travel, they couldn't go to restaurants. And so they quit their jobs and they went and found other jobs. And so there was this huge reallocation of people from jobs that they actually didn't want that much to jobs that they wanted more. And we think that's a real factor in this. In addition, given the tremendous labor shortages, a lot of time and effort went into supplementing and people's technological capabilities in ways that substituted for labor. So there was a lot of that.
Can you give an example of what you mean?
Sure. I mean, just call centers. There are lots of ways to, you can now do call centers, so they're much more automated. We're getting to a place where call centers will be done by artificial intelligence, probably. But also just, you go to a fast food restaurant, which of course I never do anymore at my age. But I'm told, if you go to a fast food restaurant, a lot of that is, and I've seen this in airports actually, you don't necessarily need somebody to take your order. You've got a nice menu, you punch a screen and the food appears. So, and there was tremendous incentive to do that when there weren't any workers. I mean, you saw stores that didn't have very many people in them and that sort of thing. So I think that's an example that we saw.
I don't think I heard you mention in that response anything about like generative AI. I'm wondering, do you think that could be part of a new era of productivity acceleration?
Artificial intelligence, pre-generative AI, is used all the time by big companies and modest-sized companies too, and it's certainly having an effect on productivity. Generative AI is just in the early stages, and certainly the companies and the banks in particular that we deal with are not really using it yet. They're not really deploying it yet, and they're very aware of the risks in it. So, but over time, I mean, you can find estimates from credible organizations that generative AI will create a burst of productivity, a large burst of productivity in the next decade. You can also find skeptics, very credible skeptics who think that that's hugely overdone. The history has always been that there's innovation, there's technology, it doesn't show up in the productivity statistics at all, and then it shows up a lot, but much later. So it's usually later and bigger than we expect. That may be the case here, because this really, it is an extraordinary set of developments, and the ability to replace a lot of work that's currently done by humans, including well-educated humans, is obvious.
How does that influence your thinking about monetary policy?
It really doesn't in the short term. We keep extremely close tabs on the labor force. If you think about it, monetary policy is trying to keep the economy at maximum employment and price stability, trying to use our tools to do that. And that's you're thinking, at 2 or 3 years out, the kind of things that drive longer run productivity and that matter for the longer run are really not tools that are in our hands. The best thing we can do for technological evolution is to create macroeconomic price stability, by which I mean price stability and a good, strong, stable labor market, so that people don't have to worry about inflation, volatile or high. And so that's the most that we can do, I think. Best thing we can do.
You mentioned that a lot of the financial institutions that you regulate or you oversee are also experimenting with these new technologies, with AI. Given that so much AI is not explainable, it's sort of a black box, a lot of the time the software engineers or others who work with it cannot explain how it came to the decision that it did. Does that make it harder to regulate in the sense that there might be blind spots for certain kinds of systemic risk, right? If banks don't necessarily know how they're coming to the decisions that they're coming to, and there could be some hurting that may not be obvious ex ante.
It raises just that kind of question, many different questions like that. I would say the good news is, in terms of the institutions we supervise, We understand that, but they understand it very well. I think people are treating AI very carefully, and they're not just loosing it, at least among the regulated banks, they're not just loosing it on their customers and on the problems they face. They're being very careful and thoughtful, we believe, or at least I believe, about how they implement it, doing lots of work, but they're keeping it carefully under wraps and not deploying it so much yet in their business. And working, everyone's working to understand the technology, where it's going, what it's capable of, what the risks are. And you mentioned that it's making decisions, and we often don't know why it makes these decisions. So how do you get after things like discriminatory outcomes in lending if you don't know why it's making its decisions? So it's going to be challenging, but I would say we're well aware of that, and so are the banks.
You have a 5-year strategic review coming up. How has your experience over the last 5 years made you reevaluate, if at all, the strategy adopted in 2020?
We had a strategic review, and we have a document called our Statement on Longer Run Goals and Monetary Policy Strategy. It's 1 page. The type is getting really small, so I think we're going to go to 2 pages next time. But remember, that was the era where for a long time after the global financial crisis, rates around the world were incredibly low. For example, major European countries, their longer-term debt was yielding negative 30 basis points and things like that. How do you even understand that? So rates were very, very, very low in the economy, and that's a problem for central banks because we can't cut rates meaningfully below zero, and cutting rates is what we do to support the economy. So we actually like having significantly positive interest rates like we do now. All right, so what we did is we said there was a whole literature on how you deal with, in monetary policy, how you deal with having interest rates stuck at zero in effect, and you can't cut, you're kind of stuck, you can't support the economy, you get into this trap where growth is low, inflation is low, unemployment is high, and you can't get out of it without fiscal policy, and fiscal policy is challenged. So there was a lot of research done on it, and we took a pretty mainstream, fairly vanilla approach to that, which is, I won't go into all the details, but it was to have a make-up strategy so that we would promise ex ante to let inflation run a little bit high if it were running too low. And the thought was, if people believe that you'll do that, if that's credible, then inflation won't run low. So that's all we did. 4 months after we announced that the pandemic hit, and then inflation a year after that came up. So the change, 20 years of low inflation ended sort of 4 months or a year and 4 months after we did the framework. So the question we'll be asking in this framework 5 years later is really it revolves around how do we think about the problem of the zero lower bound now? Now that interest rates are substantially higher than they were, substantially higher. Is that going to be so the question you're asking is, do we, in a world where we review the framework every 5 years, shouldn't we change the framework to reflect that interest rates are higher now so that some of the changes we made are probably not necessary, or in any case shouldn't be the base case anymore? They might be a case that we can have that remedy at the handy, but at the same time, the base case should be more like a traditional reaction function where you don't promise an overshoot, you just target inflation. We haven't made any decisions, but those are the questions we'll be asking.
You mentioned the prospect of long-term rates being higher, the neutral rate being higher. You've said many times when asked by journalists, among others, about how we know when we've hit the neutral rate, that we know it by its works, yeah. Right? Which almost sounds like ecclesiastical or something. How long does it take to evaluate whether we've hit it? When do we know? If there are lags between the time that we hit the neutral rate and then we can see it in its works, does that increase the risk for policy errors?
Let me just take a second and explain. So we move interest rates up and down, but what is high and what is low? Compared to what is the question? You have to have an estimate of something that's kind of neutral, something that a level of interest rates that's neither pushing the economy up, supporting it, or dragging it down, which would be higher restrictive policy. And we fully acknowledge that there's no sort of either theoretical or empirical way to arrive at an estimate of what the neutral rate is that you can really have a lot of confidence in. So what does that argue for? It argues for moving carefully. So in our current situation, we feel like our policy is restrictive. We can't say exactly how restrictive it is. By that I mean it's weighing on economic activity and lending and hiring and all that, because the economy was overheated and now it's cooling down, and it's moved pretty much as we had hoped it would, which is that we've had a gradual cooling in the labor market. Inflation's come down a lot, and the labor market's not quite stabilized, but it's in a good place. So it's actually worked very well. So we've started the process of cutting rates and moving back down toward neutral. I think the right way to find that level is carefully and patiently. You don't want to move too quickly. You may have to move quickly, because if the labor market were to begin to deteriorate in a serious way, we would want to get ahead of that. But we're not seeing that. So I think what it tells you, as Catherine pointed out, we think that policy works with long and variable lags, to quote Milton Friedman. Monetary policy does have effects on economic activity, hiring and all that, but with long and variable lags. And that makes it all that much more difficult to know how far to go. I think in this situation, what it calls for is us to be careful, move carefully, and as we sort of reach the range of, or get near the plausible range of neutral levels, it may be the case that we slow the pace of what we're doing, just to increase the chances that we get this right. We're navigating between, as I mentioned in my remarks, the risk that we move too quickly, the risk that we move too slowly. We want to go down the middle and get it just right, so that we're providing support for the labor market, but also enabling inflation to come down. So going a little slower, if the data let us go a little slower, that seems like the smart thing to do.
So you say that interest rates are still restrictive right now. But if you look at the CPI numbers that have came out recently, or today's PPI numbers, core CPI is over 3%. I think when I looked, the 1-month rate is higher than the 3-month rate, which is, I believe, higher than the 12-month rate. The economy is booming. The market is on fire. Core PPI came in above expectations today. Business formations are up. Why are we cutting rates? It seems like the economy is doing pretty well.
The economy is doing very well, and that's a great thing. We totally welcome that. But look at the labor market. So what we've seen is a lot of the great data that we've seen has been because of the expanding supply side. Unemployment has moved up from 3.4 to now 4.1. By a significant number of indicators, it's still cooling. Our mandate is not for growth, it's for maximum employment and price stability. But on the inflation data, so we do see inflation continuing on that bumpy path I mentioned. Today's reading was slightly more of an upward bump than we had expected. But I would say the broader trend, if you look back over the last 18 months, we think that's still intact. We're going to tear this report apart and look at all the details. We'll get another report in December before the December meeting. We'll get another labor report. We'll get the final numbers for October by the end of this month, and we'll look at all of that, and we'll make our assessment. We do believe policy is restrictive, and again, I would point to the labor market, but it's not clear how restrictive it is. That's a very fair point, and we're well aware of that. And I think we're mindful of the risk that we go too far too fast, but also of the risk that we don't go far enough. It doesn't seem like that's where we are either. It seems like we're right where we need to be. I mean, I do feel like the U.S. economy is in a very good place, and I feel like our policy is in a really good place. We've got a lot of space to cut rates if the economy weakens. In the meantime, we can take the process of reducing rates. We can be careful about that, and that's what we're planning to do.
I know we're short on time, so one last question. There has been an idea floated to announce who will succeed you as Fed chair in order to possibly exert more influence over monetary policy, a sort of shadow chair, two popes idea. Your term on the Fed's board runs until January 2028, beyond your term as chair, which ends in May 2026. Under what circumstances, if any, would you consider remaining on the Fed's board after your term as chair ends, as Mariner Eccles did for a few years after he was no longer chair?
So I would just say I'll certainly serve to the end of my end of my chair term, and that's really all I've decided and all I'm thinking about. We're very focused just on getting the job done for the American people. That's enough of a job for us to do, and we're focused on that.
All right, well, thank you so much, Chair Powell. I really appreciate it, and thank you all for attending.
Thank you, Catherine.
We now have some closing remarks from President Logan.
All right, everybody. Of course, you've been listening to a conversation between Fed Chair Jay Powell speaking there in Dallas and taking some Q&A there as well. The moderator, Catherine Rampell of the Washington Post, a columnist there. Very brief remarks, which we pre-released and talked about. But I think, he kind of summed it up very well in the end, saying that if the data, the U.S. economic data, lets us go slower, seems like the right thing to do. And you have seen that reaction in the U.S. Treasury trade. You've seen two-year yields spike right now at 4.34. So you've definitely seen a move up. You right now have Wall Street traders dialing back their bets on a December rate reduction to around 55% from roughly 80% in the previous session. So that is a pullback. He says we do see inflation continuing on that bumpy path. And he talked about today's inflation data, Tim, being a bigger bump than they expected. That was the PPI release.
Okay, so that was that stuff. He also answered some questions about his future and what happens during the next administration. He was very reticent to talk politics and even weigh in on policies. Very, very careful. In fact, he made it a point to stay away from commenting on the economic effects of mass deportation, for example. But he did say that I'll certainly serve to the end of my chair term. So he confirmed that.
What's interesting, though, he was asked specifically and pushed a little bit when they got into the area of immigration. And he says, the moderator, Catherine Rampell of the Washington Post, said, what does it mean if the workforce shrinks? And Jay Powell, being kind of careful, said, we do the arithmetic. If there are fewer workers, less work can be done. It gets too close to, I just don't want to go there. That is getting me into political issues that I really want to stay as far away as possible. But it is basic math. And it is not just Jay Powell, but a lot of economists, a lot of guests on our air have said, if the workforce is smaller, that's less people doing work, less people contributing to the economy. You're going to have an economic impact.
Also, there are a lot of people who don't necessarily have citizenship right now who are working in jobs that many powerful business people have roles in. So I wonder if he'll actually go through with this. He said he will, day one.
Yeah, absolutely. All right, the Fed chair has spoken on this Thursday, November 14th. You're seeing reaction certainly in the Treasury trade equities pretty much at their lows of the session. We've got the closing bell coming your way in just a moment.
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Scarlet Food, taking you through a closing bell, a global simulcast. It starts right now. Carol Massar and Tim Stenovich joining us from the radio booth as we welcome our audiences across all of our platforms, including our partnership with YouTube. A lot to parse today, Carol Massar. At one point, we weren't even sure we were going to talk to you today. It's like, would she, won't she? But I guess you decided to do the simulcast anyway here. Stocks at session lows, yield spiking, Powell speaking, RFK now going to be your new Health and Human Services Secretary.
Got to get it confirmed, doesn't he?
Yeah, a lot going on, Carol. Take your pick.
Listen, what I think is really important is what Jay Powell says. If the data lets us go slower, that's going to be what we do. And you have seen that reflect in the U.S. Treasury trade. Take a look at that two-year note right now with a yield of 4.34. You've seen kind of a flattening or, out of the belly of the curve here. The expectations in terms of what the Fed does come December, next month. Again, traders paring that back. Mind you, the data keeps kind of kicking us around on all of this.
Look, you guys are focused.
Jay Powell.
You guys rightly focused certainly on what we heard from Jay Powell, rightly focused on the bond market. But Romaine, as you mentioned, Politico reporting earlier, Powell was speaking that RFK, Trump has offered RFK HHS secretary position. As a result, we're seeing shares of vaccine makers take a tumble right now. Shares of Moderna down 5.6%, shares of Pfizer down 2.7%. We'll see what kind of effect this has if he does get confirmed.
Novavax down 7%, and we should point out that the selling really intensifying in those names. Still speculative. Remember, these are reports from Politico and CNN. A formal nomination has not been made, and to a point Scarlett made just a second ago on the TV broadcast, and still has to get through confirmation. A lot of hard questions.
Not just him, yeah, a bunch of people
Everybody,
as well.
right?
Yeah, absolutely. And, we should mention as well that the economic data, if the Fed is going to look at the data as its basis for everything, the data has been coming in better than expected, according to the Citi Economic Surprise Index.
Cinemark ringing the closing bell on the NYSE today. Not quite a day to be clapping, but they're required to do so anyway. The Dow Jones Industrial Average down more than 200 points, or 0.5%. The S&P and the NASDAQ each down about 0.6% on the day. But the real laggards were in that more industrial and small cap space, if you will. S&P 400 mid caps down about 1%, and the Russell 2000 down 1.4%.
All right, Romain, and we've got a majority of names in the S&P 500 lower today, 363 names losing ground here, and we also saw that selling steepen on those comments by Jay Powell and the reaction certainly in the Treasury trade, 140 to the upside, and we've got 0 unchanged here, Scarlett.
All right, let's take a look at the sector performances. It's really interesting here today because you've got two sectors that finished barely higher. Energy up by 0.1%, and tech is basically little change at this point. And oil prices moving up slightly, so maybe that's helping support the energy stocks. But the big decliners, industrials losing 1.7%. Healthcare, as we mentioned, with the speculated nomination of RFK Jr. as Health and Human Services Secretary, and consumer discretionary losing 1.5% as well.
Yeah, a fair amount of red in that screen there. All right, let's get to some of the individual gainers. Kind of easy for me. Kind of feel like specific stories keeping these stocks higher in the trade. Tapestry.
Oh, you got Tapestry on there.
I did, just for you. Up 13%, you're welcome. Number one gainer in the S&P 500. Capri Holdings and Tapestry, as you know, scrapping their $8.5 billion plan to merge after court order froze the proposed combination of the companies. That has to do with antitrust regulators' objections. I think we have some breaking news.
Yeah, let's get right to it. Applied Materials crossing the wire. We should point out that the shares had actually risen about 2% in the cash session, now down here in the after-hours trade as adjusted EPS coming in at about $2.32 a share for that fourth quarter. That's actually a beat. The street was looking for $2.19, and sales also coming in slightly above estimates, $7.05 billion. We'll round that up to $7.1. Street was basically looking for about $7 billion even here. And we should also point that as far as the semiconductor systems net sales, and this is important because this is the one that more encompasses the potential for that AI bump, relatively in line with estimates, $5.18 billion. Street was looking for $5.13.
All right, and let's give you also the adjusted gross margin, the profitability here, 47.5%. It was about 47.3% last year. This was just slightly above what analysts were anticipating. As for the outlook for this quarter, fiscal first quarter, it sees net sales of anywhere from $6.75 billion to $7.55 billion. Analysts were looking for $7.25 billion overall.
All right, AMAT shares, keep in mind, up 15% here in 2024. Right now, we're looking at about a 2.5% decline here in the aftermarket. All right, back to some of the individual gainers. Disney, another one that was among the top gainers in the S&P 500, number 3 to be exact. Intraday up the most in nearly 4 years. Walt Disney, you know some of the numbers, posted fiscal fourth quarter sales and profit that beat Wall Street estimates. Forecast earnings growth for the next 3 years, which is not something that this company is known for doing. It hasn't made long-range profit projections. A lot of talk about what was going on.
I love
in terms
that,
of
by
streaming.
the way, too, particularly given that the guy making that forecast won't actually be around.
Maybe.
Whether, or at least technically he's not.
Maybe.
Actually, you're talking about Bob Iger?
Yes, I'm talking about Bob
You know,
Iger.
we asked Geetha, we kind of kidded with her, and we're like, you know, might he stick around? And she's like, maybe. She expects him to go, but she seems to think he's getting certainly the company on track. You're right. A good point. Anyway, third gainer here on this Thursday. Wynn Resorts, guys, just finishing off its highs, up more than 9%. This is after billionaire Tilman Fertitta reported a 9.9% stake in the company in a 13D filing. So certainly some interest in that one on this Thursday.
Okay, I want to go to some decliners. And we had shares of U.S. automakers falling after Reuters reported that President-elect Donald Trump plans to eliminate that $7,500 consumer tax credit for EV purchases. Shares of Rivian fell by 14.3%. According to Reuters, Trump's transition team had been discussing ending the subsidy as part of a broader tax reform effort. They cited unidentified sources with knowledge of the matter. Representative Tesla support ending the credit, according to the report. Once again, shares of Rivian falling by 14.3%. SMCI Supermicrocomputer down for another day, this time 11.4% to the downside. This after the troubled server maker delayed yet another filing as it continues to search for a new accounting firm. Remember, it was just last month that EY resigned. That was the company's auditor. They cited questions about its client's commitment to integrity and ethics. Now there are concerns that it's going to get delisted by NASDAQ and actually booted from the S&P 500, just after being added earlier this year. And Hims & Hers Health, the telemedicine provider, shares fell the most on record today, down 24%, after Amazon said it's launching a competing telehealth platform offering for its Prime members. This would be from One Medical, which Amazon bought in recent years. It offers a clinical visit, treatment plan, and free meds for a range of common health, beauty, and lifestyle concerns.
Let's take a look at what happened in the yield space. A lot of activity on the short end of the curve, selling to be sure, with your 2-year yield. Looks like it's going to close out the day up by about 6.5 basis points. At one point, it was up more than 8 basis points. Now back to its highest level since late January. You saw a similar move on your 5-year yield as well. But we should talk when we go out to the longer end of the curve, that 10, that 20, and 30-year yield. You saw the yields drop there, and that created a bit of a flattening of the curve. But a lot of this activity, of course, came after we got those prepared remarks out of Jay Powell at about 2 p.m. local time out of Dallas. It seemed to suggest, at least in his public comments, the potential for a bit of a slow walk when it comes to any additional rate cuts.
For now, right? But as Mike McKee reminds us, we've got another inflation print, we've got a labor market, we've got a bunch of data before we get to that December
got more
meeting.
than a month before the next meeting. That's a lot of data points.
Nothing can happen. Nothing can happen. Hey, listen, this is something that's happening that we think is just kind of wild. The Onion, along with families of Sandy Hook Elementary School shooting victims, are on tap to buy the right-wing provocateur Alex Jones' InfoWars website, which is kind of wild.
Yeah, this group was chosen as the successful bid for the InfoWars intellectual property. This is according to a court filing. We don't know the price, but a liquidator has been tasked with liquidating Jones' estate in bankruptcy to help him pay down approximately $1.5 billion in defamation judgments related to statements that he made, calling the 2012 Sandy Hook shooting a hoax.
We should point out the advocacy group Everytown for Gun Safety will be the exclusive advertiser for the launch of the site. Everytown for Gun Safety, as we know, is backed by Michael R. Bloomberg, of course, founder of Bloomberg LP and Bloomberg Philanthropies.
All right, wonderful. We're going to turn to something just a little bit lighter here, of course, and it involves Netflix. And, of course, Scarlett, I know you were really into this show when it came out, when it debuted, Squid Game. It's coming back next month.
It's coming back one day after Christmas, when Netflix shows its first pro football games. Remember when Netflix said it wouldn't do live sports? Well, it's doing that, and then it's going to hold on to that audience by launching Squid Games, the second season, which, if you watch the first season, I didn't necessarily think there was another second season in there.
Thank you, Scarlett. How do you do another season? I don't want to give away all the details.
Don't give it away. I haven't
seen
it yet, Tim.
Well, let's just say there are some twists and turns.
I haven't watched it either.
Thank you, girl. It's pretty good.
Welcome.
It's really
Some
good.
of us have taste, right, Romaine?
No, this is really good. You guys should watch this.
I am curious. It's funny. There's a great profile of the creator of this, and he kind of talked about all the pressure that was on him when he did the first one. And you see this, like he claimed he lost like 6 or 7 teeth, I guess, from all the stress.
It was very stressful, right? He ground his teeth, I think.
like, what?
So, yeah.
I was like, dude, like,
Well, maybe
no one needs
some of the
Squid Game.
He wrote 2 seasons, though. After Netflix talked to him, he wrote 2 seasons.
Yeah, so they
and
got
now he's done.
2025, then he's got another one for 2026, so,
yep.
or at the end of the 2024, sorry, then it's 2025. There you go. Carol Master. We'll catch up on it together. Carol and I are going to have a viewing party.
Popcorn.
Tim, you're not invited.
That's fine.
It's a 2 of
I've
us.
seen it, okay?
Oh,
I don't want to
sorry.
come.
They're so cool, aren't they? All right, that's a wrap. Our cross-platform coverage, guys. Radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow for the closing bell.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That is Carol Massar. I'm Tim Stenevec. And we are live in the Bloomberg Interactive Brokers studio in New York. Listening to Jay Powell a little earlier, but a lot happening when it comes to stuff around the world that we've been covering, Carol.
Yeah, and listen, one of the things we've been following is certainly commentary from Jamie Dimon. Of course, he is the CEO of JP Morgan Chase. He has been at the APEC CEO Summit, Peru 2024, and he actually sat down with our own Lisa Abramowitz, who is one of the co-hosts of Bloomberg Surveillance, talking about a lot of things. Let's listen into some of that conversation.
You had a big sea change that took place in that vote the other day, and some people were prepared and some weren't prepared. But I think the most important thing is whoever had been elected, and this is my belief, they are entering and going to be responsible for the most complicated geopolitical, military, and geoeconomic situation that the world has faced since World War II. And of course, I wish them all the best. I think people try to help get through this. It could be a difficult thing with a lot of unknowns and uncertainties. And so policy is going to matter. And, of course, who runs the government will be determinative there.
President-elect Donald Trump sends a message to you that he respects you greatly, but you will not be part of the Trump administration as a Treasury Secretary, if that were something that were interesting to you.
First of all, I wish the president well, and thank you. That's a very nice note. But I just want to tell the president also, I haven't had a boss for 25 years. I'm not about ready to start.
I want to start by also talking about the response in markets in the U.S., which has very much been, this is going to be a pro-growth shock with companies that are going to be investing much more, deploying cash, aggressive in terms of U.S. expansion. Have you seen any signs that that's truly the case?
Well, yeah, you've already seen, the markets have responded quite well. And, I think America needs a growth strategy, so I literally applaud that. I think collaboration between government and business is the way to have growth. They've already spoken about a deregulatory environment. I want to point out, I'm not talking about just getting rid of regulations, but the regulatory environment in most countries has become stifling. And in a lot of countries, including Peru, it's why you're growing maybe at 2.5%, not 4 or 5. In America, it's why we've been growing at 2% for 20 years and maybe not 3. So I do think it's a reasonable thing to have that kind of reform. And that reform has to go deeper than just regulations, which can unleash capital and investment and banking and stuff like that. It's got to be permitting and all the related things that come with that, where people, you were just mentioning in mind that, someone bought that could do rare earths in the United States. It's 10 years. They haven't gotten their permits yet. I mean, it's a shame, and we're doing this to ourselves, and it's a mistake. So I applaud any government that says, I'm going to make government more efficient. And I think inefficient government is one of the reasons that people are frustrated. That why you have some populism, because they may blame, they may look at big companies, but they also know their government isn't spending their money wisely.
Well, there you have it. Jamie Dimon of JP Morgan Chase at the APEC CEO Summit in Lima, Peru, speaking to Bloomberg Surveillance co-host Lisa Abramowitz. We should note, Carol, he did say companies will look harder at acquisitions in the wake of the Trump victory after regulation had chilled deal activity. Also, I do like his answer that he gave Lisa. They spoke just minutes after Trump sent out this Truth Social post.
Timing was incredible.
Jamie Dimon will not be part of the Trump administration. He had a pretty funny answer. Yeah,
Trump had previously said he would consider Jamie Dimon for Treasury Secretary. That was in a June interview with Bloomberg Businessweek, but later disavowed that statement. And we should point out this is Jamie's first public appearance since Donald Trump won his second term in the White House. Dimon didn't publicly endorse either candidate. His wife, Judy Dimon, was knocking on doors in support of Kamala Harris's presidential bid. And during the run-up to the election, the chatter was loud that Dimon was gliding toward a cabinet post, particularly if Kamala Harris had won. But obviously, that is not the environment we're in. In terms of the M&A, I did a panel yesterday at the Paley Center and with Ed Schuyler over at Citi, and that was one of the things that many expect the regulatory environment will be much easier to do deals, and so they are anticipating M&A activity to pick up.
All right, well, everybody's asking about what's happening with the transition team and being asked questions about what Trump is saying and what we're learning from his transition team. On that, shares of vaccine makers and companies that are working on treatments fell today. Moderna took a dive lower. Novavax fell by more than 7%. Pfizer fell by 2.6%. This after Politico reported that President-elect Donald Trump is expected to nominate Robert F. Kennedy Jr. to lead the Department of Health and Human Services. We've got with us a Bloomberg Balance of Power co-host Joe Matthew. He joins us from Washington, D.C. Not surprising that Robert F. Kennedy Jr. will be part of a Trump administration, Joe, but perhaps surprising in this position?
I think that's fair to say. I'm not sure anyone knew exactly what RFK Jr. was going to do. Donald Trump had said he would let him, quote, go wild with food and health. There's such a thing now as the MAHA movement you may have heard of, not MAGA, but MAHA with an H for health, going to make America healthy again. The idea was that he might get one of these kind of czar positions where it didn't require confirmation or an actual direct role in the cabinet. But you're right. Politico and now CNN are both reporting that RFK Jr. is going to be tapped to be the Secretary of Health and Human Services. And wow, you point out Moderna and some of these other stocks. Look at the round trip. It's like pre-COVID when you look at some of these charts here, as if these vaccines never existed.
All right, so there's being nominated, there's actually getting the job. And I do wonder, and I do feel like with maybe some of the more controversial nominees, Joe, that have been put out there that could be potentially part of Donald Trump's team in the White House and his advisory team, that maybe not everything will go through. Is this potentially one of them?
Yeah, this would definitely be one of them, as would Matt Gaetz, as we discussed yesterday. There's kind of a big question right now. Is Donald Trump really offering these up for confirmation votes? Is this some sort of deal-making play to give cover to other nominees or make another second choice, for instance, seem more palatable? Or is he just trying to pin John Thune to the wall and give him a real loyalty test? This might be just as direct as it seems, guys, and it's unclear now that we know that Republicans have a wider margin in the Senate if he can get these done. Keep in mind, when it comes to Matt Gaetz tomorrow, the Ethics Committee is going to be meeting. They were going to vote before he resigned his seat on whether to actually release the ethics report and make the evidence that they have known. That could still happen. So, yeah, these are just, again, in the case of RFK Jr. reports, it's not even a real nomination yet. In the case of Matt Gaetz, we've got a long road and a lot of things to learn.
I will say, we're just getting details from Truth Social, Joe. As you're speaking, the president saying, quote, "I'm thrilled to announce Robert F. Kennedy Jr. as the United States Secretary of Health and Human Services. For too long, Americans have been crushed by the industrial food complex and drug companies who have engaged in deception, misinformation, and disinformation when it comes to public health." The statement continues on Truth Social. I do have to ask, I mean, Robert F. Kennedy Jr. is somebody who's known for his, quote, unorthodox views on public health, most notably questioning the safety and efficacy of vaccines. It contradicts guidance from the mainstream medical community. What power would he have, if confirmed, as the Secretary for Health and Human Services?
You have quite a bit of power over that particular matter, along with, keep in mind, Donald Trump and Mike Johnson have promised to help repeal or undo Obamacare, the Affordable Care Act. This is a conversation we're having as people are just now signing up. So, look, when we consider health, when we consider the FDA, some of the other agencies that would fall under this purview, he could do a lot. It's unclear what his actual proposals would be. We've spent a lot of time guessing as to what that would be, and that's why we have confirmation hearings. It is interesting to hear this made official, I should say, on Truth Social. That's been the vehicle for making most of these announcements.
Joe, this is an administration that people are expecting that businesses will finally once again have a seat at the table. Will these drug companies, just 20 seconds, I'm assuming they're going to be knocking on the White House door.
I guess so. And keep in mind, it was the Trump administration that got the ball rolling on these vaccines to begin with. So it's a bit confounding. Not sure what this appointment would mean for them.
Sounds like politics as usual.
Sounds like there's going to be a busy episode of
what?
Joe's show tonight.
He's got a
Joe,
lot
you
of
got to get back to work. Joe Matthew, co-host of Balance of Power on Bloomberg TV. That's coming at you right at the top of the hour. You're listening and watching Bloomberg Business Week.
421 on Wall Street. We do check markets all day long here at Bloomberg. We've got Applied Materials shares now slumping 3.9% in extended trading after the semiconductor capital equipment company reported its fourth quarter results and gave an outlook. The midpoint of the first quarter revenue forecast came in below the analyst consensus. A down day for the U.S. stock market. In fact, stocks extended losses after Jay Powell signaled the Fed is in no rush to cut rates as the economy is holding up. You heard Powell's remarks live here on Bloomberg Radio.
The economy is not sending any signals that we need to be in a hurry to lower rates. The strength we're currently seeing in the economy gives us the ability to approach our decisions carefully.
The Fed chair spoke at an event carried by the Dallas Fed, Dallas Regional Chamber, and World Affairs Council of DFW. JP Morgan Chase CEO Jamie Dimon says companies will be looking harder at acquisitions in the wake of the Trump victory after regulation had chilled deal activity. And President-elect Donald Trump has ruled out giving a post to JP Morgan Chase's Jamie Dimon in his second-term administration in a jab at the prominent Wall Street CEO. S&P today down 36, ending the session at 59.49, down 0.6%. The Dow down 207, down 0.5%. Nasdaq down 123, a drop there of 0.6%. 10-year 4.45%, the 2-year 4.35%. Spot gold down $6 the ounce to $25.67, a drop there of 0.2%. West Texas Intermediate crude up 0.3%, 68.66 a barrel. It will cost $9 for most motorists driving into large parts of Manhattan beginning in January under a revised tolling plan that New York Governor Kathy Hochul is seeking to push through before President-elect Donald Trump, who opposes the new fee, takes office. Recapping, S&P down 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Well, Republicans are poised to pave the way to expand fossil fuel development, roll back Biden-era environmental regulations, and curtail President Joe Biden's signature climate law after securing unified control of Congress and the White House.
All right. Well, House Speaker Mike Johnson and other Republican lawmakers have said they will press to expand oil and gas leases on federal lands. Johnson would also like to allow more drilling in Alaska's National Petroleum Reserve. And this is coming after the Biden administration enacted regulations to thwart drilling in more than half that area.
For more on what energy policy looks like under the next Trump administration, we bring in Gabriella Hoffman. She's director of the Center for Energy and Conservation at the Independent Women's Forum. It's a conservative nonprofit based in Virginia. Gabriella, welcome. What does the Trump-Vance administration mean for energy production in the U.S.?
Well, it means you're going to see more domestic energy production, not only of conventional energy like oil, coal, and natural gas, but also a shoring up of nuclear energy. It's a bipartisan thing, and nuclear is also top of mind. But after 4 years of regulations that were very onerous, discouraging oil and gas and coal production, you're going to see a reversal of that going into this new administration. And as you mentioned, onshore and offshore leases are going to become more prominent and open. And you're going to see not only the scaling up of energy, but also this corresponding protection of the environment. Because when you're producing here at home under an energy abundance mindset, you're not going to be relying on countries with worse environmental practices. You're going to be sourcing things very safely and productively here. So it's going to be a boon not only for the economy, but also for the environment too.
I'm curious, though. It's interesting because domestic crude output actually climbed to a record under President Biden's administration. Production averaged 12.9 million barrels a day last year. It eclipsed a previous annual high set under Trump back in 2019. That's according to the U.S. Energy Information Administration.
And just to layer on top of that, Gabriella, I mean, the U.S. has been the world's top oil producer for 6 years straight, stretching from Donald Trump's first time in office through the tenure of President Biden. So, I mean, how much more do we really need to do?
Well, supply and demand really dictated why we saw a surge in oil and gas production, not because it was a favorable regulatory environment, because supply and demand, as your listeners and viewers know, will sometimes supersede the regulatory environment. And a lot of people responded very negatively earlier this year to the LNG export ban. And Europe, in wake of several days of Trump being reelected to office, responded very positively to saying that we're going to rely on the United States for LNG. A country that my parents are from, Lithuania, one of the top Putin critics, is very excited to get more LNG from us. And so our European allies are very excited for us to shore up production. But that was in spite of, you see, the reason why we saw more oil and gas production wasn't because the Biden-Harris administration created a favorable environment. It was actually quite the opposite.
Well, just on oil, we'll get to LNG and nuclear in a minute, but I do want to go back because there was big news in the commodities world today with an oversupply warning for oil. The IEA actually saying that the global oil markets face a surplus of more than 1 million barrels a day next year as Chinese demand continues to falter. Are oil producers in the U.S. actually going to want to drill new wells with U.S. output already at a record high and investors previously burned over oversupply in the market?
I think you'll see an appetite for it, and maybe they'll disperse their attention to other areas. Oil and gas companies are also looking to look into different enterprises. Perhaps some will get into the nuclear game, natural gas game more so, because natural gas and nuclear will be very much in demand for AI-powered data centers. But you have seen the American Petroleum Institute, Shell, all these different companies saying they're pivoting away from a net zero kind of climate focus with actually shoring up their traditional kind of output and functions. You've seen different headlines across the recent months. So I'm confident they'll know what to do with that. And we will, I think, see perhaps a continued growth and a continued insistence of more oil or new potential oil and gas drilling opportunities, especially in the Gulf of Alaska, the Gulf of Mexico, and areas where it was very restricted these past 4 years.
I got to ask you, we're looking at fires in and around the New York metro area. This is unusual. We've certainly seen them out on the West Coast. And, this all plays into concerns around climate change. And this then ties back to certainly fossil fuel production. You guys are committed to a lot of things, enhancing people's freedom, opportunities, and well-being. We're here, smelling in smoke. And you can talk to a lot of people around the country who've had to deal with this. What is the right, smart balance in terms of being energy independent, which includes embracing alternative fuels, as well as making sure that we actually have a future for our kids and our grandkids here on Earth?
Well, the two are not at odds with one another. I'm a hunter and angler, and hunters and anglers are probably the largest conservationists in the United States. The proof is in the pudding in terms of how much we spend on excise taxes that go back to helping replenish wildlife and such. And the question of forest management, when you have, good practices in place, mechanical thinning and other practices, and unfortunately, a lot of the times these high-intensity wildfires, which are largely concentrated out west, but sometimes do happen here on the East Coast, they're largely started by individuals with malicious intent or even sometimes by accident. So it's not just spontaneous combustion where you see this. But as we try to stress at our Center for Energy and Conservation,
a lot of it, at least here in New York, in the metro area, as we've talked with our climate reporters, is that it's been dry. We haven't had rain in a month, and just that it's not necessarily someone out there setting fires.
Certainly, there's been a drought all across the East Coast, but I'm not sure about New Jersey. I live in Virginia, where we do have a very active forest management program. A lot of states where there are privately held lands, we tend to do forest management a little better. I'm not sure what New York situation is, but perhaps it's maybe a question to the environmental department, perhaps why they were not prepared for that. And so, like I was mentioning earlier, energy development can be very safely balanced out by conservation. We did actually see this under the previous administration. I am encouraged that it's going to be back in this, second Trump administration as well, where the Department of Interior, everyone thinks that it's just for energy production, but they manage the national parks, Bureau of Land Management, Lands, Fish and Wildlife Service, and President Trump signed in the Great American Outdoors Act, which permanently funded the Land and Water Conservation Fund, which comes from offshore oil and gas royalties, and also helped to permanently fund maintenance backlog, which we saw go up $9 billion under the Trump-Harris administration across the last couple of years. So there is a lot of conservation that is practiced, even against this energy abundant agenda. So we have to look at kind of what has happened in the past to kind of foretell what's going to happen in the future. And I'm encouraged, and I think people will hold this administration's feet to the fire, but they are cognizant of conservation, and I don't think you can dismiss that here.
How do you view wind power? Because Donald Trump hates it. Senator John Thune really likes it. And he's elected Senate Majority Leader. How do you view it?
Well, I'm quite skeptical of it as someone who likes and tries to tout reliable energy. Wind doesn't really leave me optimistic. I've been very critical of the offshore wind agenda, onshore, what it does to wildlife, how it's very intermittent. I think a more feasible alternative, and some Republicans have this all of the above approach, There may be some disagreements about wind. Wind is not going to be prioritized just because of a lot of the shortcomings, very similar to solar. That's why I mentioned earlier that nuclear is actually going to be something, perhaps the true clean energy source that everyone gets behind, especially Republicans, because it's very land non-intensive. It powers almost 24/7. It has a 93% capacity factor, and it's going to be able to meet the need of this electricity demand that we're seeing. That's going to be 9% within the next 5 or so years. So nuclear energy is where I think the Senate Majority Leader and perhaps the Trump administration should look to if they feel that oil and gas will not be sufficient. But I think all of them will work in kind of sync together. But nuclear is where I think Republicans ought to go versus unreliable wind and solar.
But what do we do with the waste that, can remain radioactive for thousands of years? I mean, I get it. We've done a lot of reporting, and it certainly is interesting to see when it comes to how do we how do we fuel our energy in the future, that nuclear needs to be a part of it. Go outside the United States and you're certainly seeing it as well. But what do we do with the waste? I've been to a nuclear site. I've seen the waste. This is not stuff that just goes away quickly.
Certainly. Well, our country has gotten a lot better with waste disposal methods. And I don't know if you're familiar with Oklo, the nuclear small modular reactor.
Yeah, they
company.
report earnings today.
Yeah, absolutely. So Oklo and a lot of small modular reactors and even microreactors can take waste from these larger nuclear facilities and actually repurpose it. So you have the storage component, which can be easily addressed. And I know that's a lot of concern for people who might be a little timid or afraid about nuclear being supercharged going forward. But there are ways to even disperse that nuclear waste and repurpose it through, and Oklo and other companies are trying to do that. So that's one way to quell fears about nuclear.
I'm wondering, we've done a lot of reporting, as Carol mentioned. Our colleague Will Wade was actually down at the Vogtle plant. It's the first nuclear power plant to open in a very long time in the U.S. It pushed it's 7 years behind schedule, more than $20 billion over budget. Will Wade writes that no one is rushing to sign up for the next one in the U.S. The small modular reactors right now, at this point, this is sort of an unproven technology. None of those have been built successfully in the U.S. How does the U.S. do this for less money?
Well, you have to cut regulatory bloat. You have to have permitting reform. That's been a problem under the Biden-Harris administration with some of their rulemaking, and then also pushback from environmentalists who have been very reticent to have any kind of permitting reform because they believe it's going to hurt and infringe on the environmental condition. So if you have some semblance of permitting reform, and then you really allow the market to embrace this technology, as you all have reported and everyone has reported, the financial sector is actually very enthusiastic about nuclear. They thought it was a gamble in the past, but if the private sector is kind of warming up to nuclear, I think you're going to see this kind of deregulation of nuclear while still being, of course, monitored. Everything is subject to federal rules, regulations, et cetera, et cetera. But even the private sector is kind of warming up to nuclear. So I think our country is willing to take the risk. Although we do this technology a lot better now, nuclear can be catalyzed and scalable a lot better now because the fears have been kind of tempered down. But I think
Gabriella, we gotta run. Gabriella Hoffman, director of the Center for Energy and Conservation at the Independent Women's Forum, joining us from the nation's capital. You are listening and watching Bloomberg Business Week. Carol Massar, Tim Stanovic. This is Bloomberg.